breath is ugly. Now, breath, I'm not talking about the breathing. I'm talking about BREDTH, breath. Breath or breath. It's hard to even say the word. Let's just say breathe looking ass. But breath just means how many stocks are participating in the weakness, right? So when you see a large number of the S&P 500 stocks experiencing huge single day drops, like 7% in one day over a short window, that's usually a sign of internal stress. All right, I want you to think of it like your body, like a human body. You can look as fine as you want from the outside, but you still got high blood pressure. You understand? The market look good, but the market is a fine motherfucker right now, but it got high blood pressure. So the index can still be near all-time highs, but because a handful of these mega cap companies are holding it up, that's why. While a lot of the rest of the market is getting smoked. So that's why people feel everything is crashing, even when spot pretty much look like it's only down a couple of percent. So it's not our imagination. Breath can be weak while the index stays elevated. That's the whole point of the signal. All right. So this is also where it comes in for you to be disciplined. So when you hear people say average drawdown is 34%, that's just a statistic, okay? It's not a prophecy. Do y'all remember in school they taught you about averages, right? Averages include extreme crisis in the stock market. So sometimes the market resolves that stress by going lower. Sometimes it resolves that shit by chopping sideways. And then usually conditions are stabilized. But you do not need to use this chart to think that the market is about to go down. That's not what I'm using it for. I just want you to look at this and pay attention to the rules that we set, which is it's time to start using a smaller size. This is the time, if you trading, to use smaller sizes right now. And you need to have quicker stop losses. And this is the time to be taking fewer trades. If ain't nobody else gonna tell you, I'm gonna tell you. This is not the time to be taking ego trades. Like, this is an environment where being early is the same as being wrong. You understand? All right. So it's three engines that move this right now. We got interest rates, we got the earnings expectations, and we got positioning. So we're gonna go over three big companies that got earnings coming out. I really want us to pay attention to. Now, the rates matter because the markets, well, let's say the stock market, right? The market prices stocks based on future profits. Higher rates make future money worth less money today. You understand? So that hits tech and growth the hardest. Agreed. And the VIX is on an uptrend, so volatility makes things more uncertain. Correct. And it's funny you even brought up the VIX, because I'm actually going to be talking about that as well. I'm going to give a masterclass towards the end on the VIX, because a lot of people don't know how to use the volatility index, right? They don't know how to use it, but it's okay. I'm going to have no fear of Coach Prices here looking at it. So, again, where was I at? Yeah, the technology stocks and growth those can get hit the hardest. So earnings expectations matter, because when companies start warning about margins, cost rising, the demand softening, or competition increasing, right? Then the market stops paying premium valuations. And you and I making sure that our positioning is in the right, the right place at the right time. This shit matters. And we got the right amount too. This matters because when too many traders are leaning one way, the market moved the other way just to force a reset. That's why you get fast drops, liquidity sweeps, violent ass bounces. It's not manipulation. It's just the market shaking out bad positioning. Cool Nerd says dividend stocks are probably the safest right now. And he names a few. Check them out. So when y'all see blow-ups across, many stocks, it's often because liquidity isn't thin. It's usually thin, right, in certain names, okay? Funds are de-risking, and options Hedging flows are amplifying the move. You know, people think the market is one thing. It's not. It's a giant machine of forced buying and forced selling. I need y'all to stop taking this shit personal and read it like it's a machine. CPI. We got CPI, cool nerd. What you think about that tomorrow? Ain't that's, I mean, today, right? I think, yeah, that's today. So CPI is inflation for those that don't know. Consumer Price Index. Inflation is what determines whether the Fed can cut rates, hold rates, or tighten. And the second y'all understand that, then you're going to understand why CPI mornings are dangerous. Danger. Get on the floor. Right here. Sing it. It's been so long. Danger. No, CPI mornings are dangerous. So CPI is not just a number. It's a trigger that reprices the bond market. Bonds reprice yields. Yields reprice growth stocks, and that's why the NASDAQ can go fucking crazy on CPI. It's basically a rates derivative in a Pooh Shiesty mask. Somebody said, I think it will be, not somebody, my boy Cool Nerd said, I think it will be as expected, especially with the surprising job numbers. I'm actually excited to see. Now, if y'all allow me to coach you, for those that don't know, right? CPI days are when people that don't know, right? And that's not going to be you no more. But this is CPI are days when a lot of rookies or beginners, they blow up their whole account or they fuck up their whole little day because they trade their feelings. They see one big candle at 8:30 and they chase it. They buy calls at the top of, you hear me? I'm telling you what happens so you don't do this shit. They buy calls at the top of fear and puts at the bottom of panic. And then the market snap back to reality. Oh, there goes gravity. Yeah, it take their money. Right? So that's why we talking about it. So on CPI mornings, you do not trade the first move. You trade the first confirmation. Confirmation means the price holds above or below a key level after it spikes. But that first move is emotion or algorithms that's trading that shit. The second move is structure and institutions. Remember that, especially for my options traders. CPI is going to bring the silent killer on your ass. That implied volatility. Cool Nerd says, always wait for confirmation, no matter the environment. That's right. So if you're buying short-dated options into an event like CPI, then you paying extra premium because guess what? Everybody expect a move to happen. You might not know this because you don't even give a fuck about CPI. You like, Coach, what is CPI and why do I care about it? Because it's you paying a higher price for that event. Didn't you know? Didn't you know? All right, but not for real. So after the number hits, right, that premium can collapse even if the price move in your direction. I can't stress that enough. That's one of the variables that you might want to start paying attention to. Implied volatility, right? Everybody expecting a move. So it's after that move happens, then the fucking premium goes down, regardless of if you were right about the price. Somebody says, in general, do you stay away from options with high implied volatility? Yeah. I would like to be in the trade, cool nerd, when the IV happens, right? I want to be in that trade and I want implied volatility to work in my favor, not against me. You feel me? So you get in at a certain level and you get, this is not like it's not like a roller coaster. On a roller coaster, you start at break even. You want to end at break even. If you get off that roller coaster at the top, you gonna fall, buddy. You gonna fall. Not without no parachute either. Your ass ain't gonna, not with a parachute. Pardon me. You gonna hit the ground. It's a horrible analogy, but what I'm saying is, this is not a roller coaster. If that make any sense. All right. So, anyways, you either want to size down during these type of events, right? What does that mean? That means I'm not trading a lot or I'm not using a lot. Also want to use spreads during events like this. You want to choose a smarter day to expire. Choose a better expiration date. Or wait till after the event when the volatility is cheaper. Because CPI is not a lottery day. I told y'all gamblers, call that number on FanDuel, that gambling hotline if you got a problem with gambling. All right. So what did you say, Big? What did you say, nerd? The problem is many people trade with a gambling mentality when it's a game of knowledge, not chance. Precisely. Exactly. This is a professional execution day. That's what I call it. It's professional execution day. So, again, the action today, I guess, yeah. It's not in random small caps, right? We want to pay attention to the other index products and rate sensitive leaders. So if you trade in futures, let's see if we got what the futures is at right now. Like if you trade in futures, all right, what are we at? Some of y'all trade the micros. I trade micros actually. I just was wondering how many of y'all don't, because I know some of y'all money long, so you trade the big boys, right? But if you're just starting out with futures, it's okay to trade the micros. But again, ES and NQ, we're gonna talk about them for a second. If you trading options, we got SPY, we got QQQ. All right, so we watching the overnight highs, the overnight lows. We watching yesterday's highs and lows. Those are the magnets in the line in the sand levels. You with me? So we also gonna watch whether the market reclaims a key level and holds it, or if it touches it or rejects it. Lisa, you trade options? Okay. How many of y'all trade options versus futures? I know some of y'all trade Forex, some of y'all crypto bros or whatnot. That's cool, but we'll talk about that in a second too. I just want to see something real quick. So the goal is not to predict, y'all. It's to participate once the price actually proves itself. Somebody says, thank God someone finally preaching some Webull, superior technology, graphs, AI. Yeah, I'm liking the company a shit ton. I'm also bullish on the stock. I don't know about futures. Yeah, I like futures, Lisa, because it is 23 hours a day. But yeah, I'm going to say this for the people in the back. Sometimes the best trade on CPI day is, that's my drum roll, no day. It's no trading day. No trade, motherfucker. The best trade on CPI day sometimes is no trade. Like if you can't literally say okay, this is my invalidation level, aka this is where I'm gonna put my stop loss at, or if the spreads is crazy, right? Like yeah, I hope y'all know what I mean by spreads. I'll teach y'all that in a second. That's a whole nother lesson though. But if the candles are consolidating whippy as hell, you're gonna sit on your hands. Patience is a strategy. So, no trade is a trade, okay? Overtrading is a disease. All right. So next week, it's a holiday effect. It's going to be a 3-day weekend. So we might see a lot of, stocks gap up or gap down. I like VTI too, Lisa. Best trade is defense during CPI, says user 1948911433937. All right, so yeah, we got a holiday week coming up, okay? So it's going to be some liquidity changes. So a closed market day compresses attention, so you're going to see some gaps. Positioning happens in fewer sessions, okay? This man read his whole username number. Yeah, I mean, he got his whole, I don't know why he just won't change. I would change my name to John Doe, but some people just use TikTok just as viewers. They have no purpose to show you what their gender is, a picture. But I enjoy the engagement and I value it and I'm thankful. So I didn't mean to call them out, but damn. Every time somebody come in here with no username, I do that. That's one of my things, Lisa. I hope and I got that from my homegirl Drake used to do that. I'd come into her live and she'll read their whole username. I give her flowers for that. I adopted that. It's my thing now. But yeah, like I was saying, all right, so with this holiday season, with this holiday week coming up, it will create a lot of swings. All right, so whenever the trading doors open back up, people come back. They usually rebalanced or they reloaded. Like, okay, I'm reloaded. What else do you trade for options? I'm about to get into that. I'm actually about to get into that, Lisa. We're about to talk about earnings in a second. I just like to get this part. This is the intro. We still in the intro of this whole show. I don't know how much time you got, but you know, for those that know me, this is what I do. I come on here late at night sometimes and randomly when I can't sleep and share my thoughts. Teach people as much as I can, you know what I'm saying, before I get dizzy. I'm gonna teach till I get dizzy, right? So y'all might learn till you get dizzy. I'm gonna overwhelm you with this information. And I spend a lot of time with people. So I've had this lady tell me, not to get sidetracked, but yeah, she like, yeah, I wanna. She hired me to teach her 10 classes, like 1v1, and yeah, I mean, she's busy, super busy, you know. And she like, yeah, after about 6 lessons, she wanted a refund. I'm like, I mean, I was giving her like 2-hour 1v1. So I'm like, you know, it just made me want to give back as much as I can free. I'm not even really taking no more clients. Like, she kind of messed it up for people because, yeah, I don't take people serious now. So I come on here and I'm doing this for free. I don't want y'all money. You just got to pay attention. You learn this lesson, you learn it. If not, it's cool. If you know it already, then fine. Maybe you can help me teach some of the people in the comment section, right? This is a each one, teach one environment. That's why it's iron worth trading, because iron does what to iron, okay? Now, again, I'm going to give y'all a few rules and stuff because you got catalysts like retail sales coming out, Fed minutes, you know, GDP type reads depending on the calendar, whatever event it is. All of those can shift the narrative. We are in a data-driven market right now. You're not going to see smooth trends most of the time, right? It's going to be some stop and run tapes. They're going to punish you for having a sloppy entry, but they will reward you if you have a plan. Remember, if you fail to plan, then you plan to fail. So rule number 1, we are going to reduce our size. We're not going to oversize, right? Ooh, I'm getting out of hand. We're not going to oversize. This is an S&P chart. So yeah, the first thing we're going to do is not oversize. Y'all know what I mean by that? Okay, if you only got, let's say you only got 10K in your trading account, then why the hell are you putting 8,000 on the trade, 5,000 on the trade? Hell, even 3,000 is too much. You only got 10K in that account. You lose 3 trades, you lost 9K if you lose them. You know, think about it. Yes, if you not using stop losses too at that. You risking it. Not only are you leveraging it, but you are risking it. You're over leveraged and you are not managing your risk. So rule number 1 is reduce your size. If you don't reduce the size in a volatility regime, then you are not a trader. You are a volunteer. You're a volunteer. Rule number 2, I need you to define your risk before the entry. Coach Price, what you mean by that? I mean, you need to say, I'm only willing to lose this much, right? If this option costs me $460 to get into, hell, after I lose $60 out of that $400, I'm getting the fuck out that trade. That's you basically defining your risk before you even enter. If you enter and then decide where your stop is, you gambling. Put a W in the chat if you get that before I move on. I need to know. Before I come with rule number 3, I just need to see about 3 W's and then I go on to rule number 3. Okay, Angel, get it. That's what's up. Hit the follow button if y'all get it. If you haven't hit the follow button, hit it now. Just got in. I'll catch up. That's what's up. I got you. So I'll start over just because you commented. Okay, that's all I need to see is some type of engagement. Rule number 1. What I'm basically giving you is for next week what to expect. We got a holiday coming up. It's a holiday effect, so it's gonna be a lot of big swings. We might have gaps up, gaps down, and shit or whatnot. Then tomorrow we got CPI coming out, so be very fucking careful. Be very careful tomorrow. But anyways, uh, this week that's coming up, sometimes you need to take less trades. Rule number one, reduce the size. If you don't reduce size, then you're not a trader, you're a volunteer. So that means don't use as much as you would normally use. And also you need to think about how much you're willing to lose before you get in the trade. That's rule number two. And if you enter, you know, and then think about how much you're willing to lose, then you gambling. Rule number three, stop chasing the first candle. Stop chasing the first candle. Like, let the market show you the direction and then pay for confirmation. Okay, rule number four, I need y'all to journal your emotional mistakes or else you will continue to make them. I see your comment about what do I think about Arbitrum, but what do you think about what I'm talking about right now? All right. So again, if you can execute this information, it will help you tremendously. Okay. You want to journal, you want to repeat what works and stop doing what doesn't. A lot of losses come from the same three behaviors. People revenge trade. They either overconfident because they won a couple of trades or they seen somebody on TikTok tell them they can make a lot of fucking money day trading or swing trading. And now they think that this is what they can do because they seen some pretty girl get on there and she was doing it. So, hey, if she could do it, you can do it too. That's true. Yes, anyone can do this. But that means anybody can pick up a book and read, and anybody can study and learn, and anybody can also lose money too. And then you got to lose money to learn, or you think you're just going to pick this up and learn it and then not have to lose anything? It doesn't work that way. I never hear them teaching you how to lose. I always hear them teaching you, I won this much, I quit my job. I blew blah blam, leading y'all to, it's the blind leading the blind. Just followed, trying to pass my first evaluation, first time getting into a stock trading prop firm. Be careful with the prop firm, but I'm not against prop firms, but I don't use them. I don't use a live market. But you basically using a prop firm when you paper trade, you might as well be paper trading. You trading in a simulated market. You're going to pass it though. You're going to pass it. You know what I'm saying? I have no doubt in you, Angel. Is that Angel that said that? Yo, we got two angels in the building. We got somebody named Angel Messenger of God, Angel Cash. I get real emotional in this motherfucker if y'all keep coming. Let one more person come in here named Angel. I know something. You know what I'm saying? I'm surrounded by angels in here tonight. Got a live account too. Just need more capital. You gonna make it. You gonna get it. Because I know who you work for. Yeah, the Most High gonna look out for you. All right, so again, I gave y'all the rules. Just be patient. Like I said, a lot of losses come from people who are impatient. Your profit and loss, the P&L, when you see P&L, that's a mirror. If you fix the person, you fix the performance. Right? Okay. So if you watch this and you feel better, that's what's up. That's the point. Like, the market job is to create uncertainty. Our job is to respond with structure. Right? Okay. So the blow up charts, me showing y'all this is not me, being a fortune teller. I never claimed to be a guru. I'm just a teacher, a master teacher at that. To Moan Khan, face ass. So CPI is a volatility event. It's not a casino. And next week is about patience and planning. It's not about fortune trades. And I hope y'all learned that. If I taught you something, please hit the follow button if you haven't already. And we're about to go into earnings real quick since we got a little bit more people in here now. I'll go into earnings. So what companies do y'all got next week for earnings? I'm going to show y'all my favorite three, the main three pretty much that are in focus right now. Again, this information is on Webull. I'm pretty sure you can see this on Robinhood. You can see this on Thinkorswim. All of those different platforms, you can easily look at this information there too. But I like the way Webull is set up. It's just my preference. And they don't pay me. Maybe y'all should tell them to. They don't pay me to tell nobody that. They should. Again, this is not financial advice. This is for educational and entertainment purposes only. TikTok, don't hurt me. We love TikTok shop. But we're going to talk about why these three names matter right now. Heavy on the Walmart. I agree. I agree. But I don't want nobody to get sloppy Joe. They see earnings coming up and they think that shit mean easy money. That's not the case. Earnings is not easy money, ladies and gentlemen. Earnings is a volatility event. A volatility event. No, remember that word so you can know when you see a volatility event what it is. This is earnings is one where the market reprices the it's gonna reprice that company in minutes. Like you don't even understand. Yes, you thought that shit was worth this, it's finna be worth that. If you don't understand implied volatility, okay? For those that just came in, some of y'all might not know what implied volatility is. That's how expensive options are before the report, right? How much do we think this is finna move? Yeah, seconds. Facts. Patience got me from 10K to 30K in 6 months. Impatience took me down to 1,000 in 3 months. It happens to the best of us, Angel. You'll get it back. You'll get more than that, right? The windshield is bigger than the rearview mirror, right? So again, we're gonna talk about these three companies. I just want to make sure that you will pay too much if you don't understand implied volatility, and you still going to lose even when you guess the right direction if you don't get this shit. So tonight we using these three names: Walmart, Alibaba, and Deere. Good old Deere. Them down sound burnt. I'm gonna have myself some time looking at. All right, so I'm sorry, I got a little Tourette's. They represent three different parts of the economy. We got the U.S. consumer, Walmart. We got global China / technology demand and sentiment, Alibaba and the 40 Thieves. And the real economy, production, industrial, agricultural spending, Deere. Deere, D-E. I ain't talking about the Desert Eagle. So when these types of stocks are at key technical levels into earnings, they become decision points for the entire market. Earnings is not the company reporting results. That's not what earnings is. It's the market deciding whether the future story got better or worse. The stocks moves are based on guidance from the company. We want to know, where y'all what y'all got going on. How much money are y'all making? How much money y'all got left over after y'all done spent, everything on business expenses and shit like that, right? We want to know y'all margins, y'all expectations. We want to know this as a trader because we already knew a lot of the numbers ahead of time. All right, this shit be priced in. That's what, when you hear people say, oh, that was already priced in, I mean, we already knew. And the options move based on two things at one time. It's really more than that. We got a lot of variables, okay? A lot of variables. So I don't know if I got any moderators in here before I complete. I'm not going to let you raise my blood pressure. Hold on. I'm going to let you stay in, but I'm just going to mute you. There we go. Yeah, Lisa. I ain't got no moderators in here right now. If they would, he would have had, listen, I ain't gonna say switch, cast iron. Cause soon as I go to talking crazy, then, I get hit with something. So I ain't even gonna say that because TikTok will get me up out of here real quick. And then I ain't gonna be able to teach y'all. That's all. So anyways, like I was saying, yeah, it is. Real talk. I'm not about to let them get me upset. So again, earnings season, you want to pay attention to the volatility that's about to happen. It's very important. Can any of y'all that was listening remind me where I was at before I got rudely interrupted? I think I was talking about I was about to tell y'all about volatility, if I ain't mistaken. The variables, I remember now. Don't worry. Options are they, the way they move, they based on many different variables. A lot of different shit is the reason why they move, but mainly two things at once, right? So you got price, you got the price direction. So you're gonna have to learn price action. So the price direction matters and volatility matters. Volatility is the silent tax. It's the silent tax. Angel says earnings equal how the markets are doing, how that company is doing, during earnings season too. Yeah. So again, price direction and volatility. Volatility is the silent tax. You're going to have to pay for this shit. Before earnings, the option prices are usually inflated because everybody expect a big move. But guess what happened after earnings? It's like a balloon that got air let out of it, okay? That volatility is going to collapse. What is your opinion on earning Webull? On Webull earnings? What do you mean? On like the company, the stock? What do you mean? But that's pretty much what I'm using right now if you're asking what I think you mean. Because I'm showing you. I'm showing you. Again, after earnings, that volatility is going to go down. So I don't want you to make a Ricky mistake and buy calls or puts. They might buy a call or they might buy a put. Then the stock will move a little, and the options still lose value because the fear premium evaporated. That's why I tell people, if you're going to trade earnings, you either one, trade it like a plan and you got defined risk. You know exactly how much you're willing to lose and you accept the cost of that event. Or you wait for the reaction and you trade the clean trend after the coin flip. Again, this is for educational purposes only. That's what you're talking about before you got interrupted. Oh, okay, thank you. Would you trade on TradingView? I used to, Lisa. I don't like the interface. I don't like it. That's just me though. I used to use only TradingView. It was my first love. No, for real, I used to use TradingView first. But one day, I must have fucked up the settings and I ain't been able to get it back right since. I don't know. I don't even like the way it works. I use Robinhood before I use TradingView, but that's just me. But TradingView got a shit ton of indicators, and I think that's why people like it. But hey, now that I can create my own indicators on Webull, I like it even more. I'm a Webull fan, but yeah. They got too much going on. I think we're going to talk about, you said heavy on the Walmart, right? Let's talk about Walmart. Heavy on the Walmart. How many of y'all shop at Walmart? A lot. Put a W in the chat if you shop at Walmart a lot. Now, if you shop at Walmart and don't own any Walmart shares, come on now, what's going on now? What's going on now? What you gonna do, barbecue or mildew? Because you could have had Walmart when it was $10, $20, $15 to $20, $35 for $47. Do. Now this shit above 100. Nah, for real. Yeah. It's okay, Lisa. A lot of us are consumers. I tell my cousins all the time, y'all motherfuckers buy Nikes. And Nike, it costs you more to buy that pair of Air Force Ones than it do to be a part owner of the company. Right? But yeah, I'm going to give y'all a breakdown of this chart, what you're looking at. We're going to talk about Walmart because this is pretty much the consumer thermometer. The thermometer, B. This is the consumer thermometer. Walmart matter because this is like a window into the real U.S. consumer. Remember, we just talked about being a consumer, Lisa. You consumers versus producers. Walmart is a producer. The people that buy is consumers, are consumers. You either produce the product or you consume the product. Right? So, when Walmart talk, you learn about inflation pressure. You learn about the household budgets and whether people are trading down to cheaper goods, okay? So in a market that's already sensitive to CPI, remember I keep saying CPI, but that just means consumer price index. So, and higher for longer rate fear. We worried about that shit too. So Walmart can amplify the whole narrative. If Walmart says demand is strong and margins are stable, like, look, we good. A lot of people still shopping with us. Our shelves is, damn near empty. It's more people shopping with us than it is enough for us to fill the shelves. But we good. We got enough. That's gonna calm people down. If Walmart warn people like, hey, shit up, we got ain't enough people buying, it's gonna add fuel to the consumer is finally cracking story. So I showed y'all here that Walmart got earnings coming out February the 19th, right? February 19th. I'm looking at it now, and this chart is showing Walmart is around $133 a share. You got it on your watch list. That's what's up, Lisa. I'm glad you paying attention. Real talk. So it's 133, and it's pressing into the red line near 134. It tapped it, right? So that's where we at. That red line is the level of resistance, aka the ceiling, right? That's my prove it level. That's my prove it level. If the price can break and hold above that area, the market is basically accepting higher prices. And if you're a momentum trader, you're going to treat it like it's a continuation. Remember, y'all, the triple C's, triple C's, huh? The triple C's is continuation, consolidation, and correction. Market going to either be doing one of the three: continuation, consolidation, or correction. So, yeah, like I said, if it break above that level and hold that area, it could be a continuation, which means it will continue to go up. If it spike above and fell back under it, then that's a classic earnings week trap zone. You basically got caught in a bull trap. And then you're going to have, is where late buyers become forced sellers. So a lot of people come in, you late as hell, you didn't get in at 126, you didn't get in at 121, you didn't get in at 116, you didn't get in at 112. So that's where they get screwed, okay? Underneath, we have a clean ladder of support at 126. That's where the price was bouncing off of it like a floor, right? That's the most recent level of support. But we do have previous levels of resistance and support. If you look under the yellow dotted line, Lisa says it be confusing me sometimes on when to tell when it breaks or not. Yeah, Lisa, so I think that's everybody. That's the reason why I enjoy due diligence, and I like when the market is closed and I can take my time and do some back testing and set some key levels and pay attention to those levels and see if they get hit the next day, if the price reacts to it or if it comes back to it. And you will be amazed. You would be amazed. I know I am. I can't tell you how much we scalp the fuck out of SPY. Sometimes it's textbook. It's going in one direction. It's going up and down, up and down. Sometimes it go up and down and up, down, 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 and you can't keep up with the fucking pattern. But sometimes it's up, down, left, right. It's simple, basically textbook. Sometimes y'all know what I'm talking about, where it actually hits the level of support and goes back up to resistance. Those type of trades. Okay. Back to Walmart before I get off topic. Now, where was I? I got off topic that quick. Again, we got this clean ladder at 126, the yellow dotted line. This is my first must hold area because it is close to the fast trend that just happened in recent structure. We also got 121. This is the next shelf where the price previously built. If you look there, you can see this is obviously a level where the price was respected at. The 121 level was previous resistance. And below that, we got 116 as a previous level of support. The price bounced off 116 and bounced back to 121 and actually broke above it and went all the way up to above 126, closed above 126. And then 126 became that level of support because it came back down to it and failed to break back below 126 ever since it's got up there. That is what makes it a must hold area. And then we have a deeper pullback zone at the very bottom at 112. That is the, if we lose this, the whole move is being questioned. How do you decide where you hold is? Do you look at the times before, like 30 minutes before? Yeah, I go on all time frames. Honestly, I do something called top-down analysis, right? I like to look, see, this is a bigger time frame. So this is for like swing trades, you know what I mean? This is so I can see the bigger picture. So if you a day trader, it's day trading 0 days to expired contracts. It's like they use like a 5 minute, 1 minute time frame, sometimes a 15-minute time frame. So they have no need to mark levels on a year to date chart or a 6-month chart because they not in a trade for longer than an hour, longer than 15 minutes sometimes, longer than 7 minutes sometimes, right? Just as long as it's within that day. But I don't like to watch TV with my nose on the TV screen. I like to scoot the fuck back. When in doubt, zoom out. When in doubt, zoom out. So yeah, I'm looking at it so I can see the bigger picture. But so yeah, my moving averages, right? We're looking at them. The moving averages back up my thesis. The price is trading above all three moving averages right now. It's above the 200 moving average, which I got shown here as the purple line. It's above the orange line, which is the 50 EMA. And it's above the 9 EMA, which is shown here as the blue line. Price is trading above all three of them. That's a bullish signal. Okay? This tells me that the trend is strong. But the RSI is about 73. The relative strength index, that's the bottom blue line. That's the blue line at the bottom. That's an indicator called RSI, the relative strength index. So whenever the RSI is above 70, it's telling you that it is extended. Okay? Basically, it is being overbought. Extended don't necessarily mean shorted. It don't necessarily mean sell or puts, okay? We're not chasing shit. When you chase something, it's running from you. Extended names pretty much they go into earnings, right? Whenever you get something that's extended like this and we got earnings season right around the corner, it would punish you if you chase it because the market can use a decent report to sell the news. RSI, yes, brands market. That is an indicator right there at the bottom of the screen with the blue squiggly line. Whenever that RSI line is under 30, it is oversold. When it's over 70, it is overbought. And usually when something is overbought, who can tell me what happens to a company or a stock that is overbought? Usually, not guaranteed, but statistically speaking, what happens to a stock that is overbought? Anybody? Yes, Lisa. Statistically, yes. What happens to companies that are oversold? Oversold. Okay, I'll show you that in a second. I'll show you a couple of oversold companies as well, but we'll wrap up Walmart for now. I just wanted to make sure that you understand, real talk. You need to know that if you swing trading options, I need you to have the right mindset. If you one of my students, everybody else can do what the fuck they want. But if you gonna say Coach Price taught me, then we have to, we going up against the people who say Coach Price ain't teach me shit. It ain't too many of them. It's two of them. We got two hecklers. But it is what it is. I think it got a lot to do with me being a Scorpio and how I get off track and I use cuss words and shit like that. I don't mix with everybody. You can't make everybody happy. But anyways, if you swing trading options, right? You don't hold. Why would you hold something through earnings unless you got literally a strategy that's built for the event? You trading this shit just for the event. Am I lying, y'all? How many of y'all know what I'm talking about? All right. So I know some people sit and they listen to the show because they like, this guy knows what he's talking about. But I kind of need y'all to say, hey, no, you're wrong there. If I'm wrong, I don't want a bunch of yes men or yes women people that's just gonna say yes. No, I want you to. And if you don't know what the fuck I'm talking about, I also will explain it to you. Lisa, I can't believe that. I thought I've seen you in here before. Well, it's nice to meet you. I'm glad I found you. You found me. Okay. But I'm a magnet though, So people think they found me, but I really pulled all of y'all in here. The algorithm is on my side when it comes to bringing like-minded individuals because I get a lot more people that actually want to learn than I do people that don't. If you can learn, then you can earn. If you can learn, then you can earn. Again, the RSI is 73, so we just going to pay attention to that. But we're not going to hold. If you swing trading, you don't hold shit through earnings. If you want direction, right? If you want direction, you're going to trade the setup into earnings, but you're going to have a defined invalidation level, right? Or do you have a Discord? Yes, I do, Lisa. You can hit the link in my bio. It should be 2 options in there. Maybe might give you more options in there, but I know you can find my Discord in my bio for sure. It's in my link tree. Please feel free to join. I would love to have you there. You and anybody else that want to join, all of y'all are invited. Meet me there. You have access to me more, right? Ask me a bunch of questions. If I don't respond, I have people in there that have been trading for more than me, longer than I have. 15 years of experience. Some of my best friends are in there right now. 3 o'clock in the morning, yes, chatting up a storm. No, but that's only like 2 to 3 people that's doing that. I don't want y'all to think it's a shit ton of notifications because it's not. It's a small, tight-knit community. It's almost 400 people in there. So it's not a big community like that, right? And it's a no bullshit environment. So you ain't got to worry about that coming in there and nobody making fun of you for anything. And you can ask any question that you want to. And if y'all new here, please hit the follow button. Again, I'm happy to have you here and you don't want to miss another live stream. Anybody that's been in the show, they'll tell you that they've learned a lot already. They only been here for a few minutes. Now, again, if you want the earnings move itself, understand that you paying an elevated premium. If you trying to trade earnings, just know that you paying extra. You paying some shit, like you paying more just because it's going through earnings. So you either size small or you structure spread so the volatility crush don't wipe you out. For the day traders, you're going to treat 134 like a line in the sand. We're going to treat 134 like a line in the sand, my day traders. If it break and hold, then I can go long. If it pop above it and fail, then I can do some short-term shorting because I know some people probably about to take profit on Walmart. It depends on how we hear about what happens during earnings. But we're going to see it. And if we do short it, we're going to go to the next shelf, the next line of support, which would be 126. Tesla got some new shit coming out. I'm long-term bullish on Tesla, Mona Lisa, Can you explain about the Coinbase, please? Yes, I will, Branch Market, if you can hit the follow button and stay here long enough for us to get there. Because next up on the list is Alibaba. Next up on the list is Alibaba. Okay, because we talking about these companies that have my attention for earnings season coming up. But I will go over Coinbase. It is on the list. It is on the list. All right. So again, thank you for hitting the follow button. Now, is this Alibaba, Cedric? Yes, it is. All right. So Alibaba, BABA is the ticker symbol. Baba matters because it's not just quote unquote a stock. I use Alibaba as a sentiment proxy for China technology. I also know emerging markets, risk appetite, big money position. And see, when China's headlines shift or whenever global risk appetite changes, Baba can move hard because it's liquid and it's widely watched. Now, according to that earnings calendar I showed y'all, Baba got a reporting window around, let's see, when they supposed to have earnings come out again. Alibaba got earnings on the 18th, between the 18th and the 23rd. Right? Y'all see, I mark the levels of support and resistance for you here as well. So again, this matters because the earnings season, I just told y'all why earnings season matter. If you can, the uncertainty that's going to happen around that exact date can keep the option premiums higher than giraffe next. Some of y'all know what I was going to say. But yeah, it can keep it high, and it's gonna create a lot of messy price action. And a beginner, a beginner trader, rookies, they hate uncertainty, right? And then they start forcing trades because they don't know what the hell going on. A professional or an ironworth trader, we accept the uncertainty and we reduce our size. Oh, I'm still gonna trade, but I ain't gonna trade as much. Now on this, what's this, a weekly chart? So each candlestick represents a whole week of time. I'm actually showing you Alibaba from now all the way from last year. That's February of last year to February of this year. Yes, Alibaba was $80 and $90 last year around this time. Sometimes your money will grow once you realize, like, a lot of these companies that you shop with and consume, man, I don't know, man. I'm learning a lot. I'm learning a lot in finance, and I'm studying, I'm taking these tests. And I've considered, like, what this would look like if I got this license to become a financial advisor, and this thin line of stuff that I wouldn't be able to say if I was fully licensed. And the stuff that I can say because I'm not licensed makes me kind of like straddle the fence on whether I'm doing the right thing or not. But one thing I do know is I'm not about to get in trouble by the SEC. They're not going to be knocking on my door. Get on the goddamn ground. No, I'm not doing none of that. And if I do end up going, I'm going, they better not put me in the cell with one of them billionaire making ass people. I'm going to listen to everything they got to say. I'm just playing, y'all. Just joking. I say that a lot, though, but I've seen a lot of movies and shit. That's Hollywood. Blame it on Hollywood. Tyrell Bullops, what's happening? Billups, my bad. I said Bullops because we bullish as hell, my boy. What's happening? Now, on the weekly chart, we got Alibaba around $158, $159, right? And it's sitting around a key mid-level. I ain't fucking with nothing that's in the middle of support and resistance. I want to see if it's finna hit off support or if it's finna, fall from resistance. But either way it go, it's a key mid-level because it bounced off this level in the past, okay? So this level is the balance point of the recent range. Right above this, the big resistance that we got up near $192.80. This is a major ceiling where the sellers showed up before. Looks like an ascending channel. Yes, it does. Yes, it does. It is one. Not a channel though. It's actually a wedge. JKB products. A channel would look more like what SPY is in right now. You know what I'm saying? That's like a channel that fish swim in. You feel me? A wedge looks more like you know, like that. Alibaba. Filthy McNasty, I'm glad you joined the live, bro. I actually was looking at some stuff on sam.gov. I would super appreciate it if I can get a call with you tomorrow, because I got something you might find interesting. You know what I'm saying? I was looking at some contracts on there I want to go over you with, so please get up with me. Why is Webull useful? Trading Empress. Because of WeLearn, they have a heavy system on there that anything you want to know about trading or investing, you know, they have a section on there that you can learn from. Now, if they all got that, cool, but this one is something that I feel like is good for beginners. The interface is everything. Yes, please, I'm serious. All right, I'm serious. But now, on the weekly chart, we got the previous level, 190, what we got? What's that, 192. Can y'all believe that Alibaba pretty much went up damn near $100 within a year? Now, during them China wars and shit, them trading wars that we was in, that's what caused it to go down a lot before it could break 144 in the beginning of last year. And then by the time April came around, it was back to $90 again. Would never break below that level. So I had a guy I used to hang out with. His name was don't matter his name, man. He was heavy on Baba. He probably still buying Alibaba to this day, because I know he was buying a shit ton of it back then. All right, so yeah, again, that previous level at 191, this is the major ceiling that they showed up. Below we got 144. This is the first serious support shelf, and then 107 is the bigger long term. If it falls back to this, then we in danger again. And then if you look at my moving averages, they are telling a story of recovery, but we don't really see dominance because we just broke below the 9 EMA. Appreciate you for the heart, young Byron. Thank you for the gift, man. Appreciate you for the gift. If y'all new here, hit the follow button so that you don't miss another live. How do you feel about Hood? We're gonna go over Robin Hood too, Omar. See, some of y'all hitting the nail with the motherfucking hammer. Y'all 2 steps ahead of me, because y'all naming stocks and shit that I'm gonna talk about, but I'm not there yet. JKB said I sold it 14 years ago for like 150 from 100. Haven't looked at it again until now. Yeah. You talking about Alibaba? Would you ever do a live trade and tell people when to start buying? Nah, Lisa. Yeah, nah, I can't do that. That's against, I'll lose my license. I'll lose my license if I did that shit. Yes, Baba. And then if I lose my license, I guess I'll be able to do it then, because why the fuck would I care? But no, I'm not doing that. Don't make sense. Don't make dollars. Don't make sense. But I will get on here and live trade. I just can't legally tell you, hey, this is what you should buy, until I pass that motherfucking Series 7. Then you might catch me on here doing that. But then even then, I would need to know your risk assessment. I would need to know so much about you before I did it specifically tailored for you. I can't tell multiple people at one time what to buy, but I can go live and show them what I'm buying. I could do that now. Lisa. I do it in the Discord all the time. All the time is very exaggerative, though. I'm exaggerating. Is it Adama? Adam Jr. says, I'm trying to get my Series 7 too. Not trying, we are going to, Junior. Are you trying to listen to me right now, or are you listening to me right now? All right, you see how it's a big difference? Fuck all that trying shit, we gon' do it. It's not even hard. What made me do it was, that's right, you're going to. So this lady explained to me how good I was, and she said I should do it. Simply put. And I did the research. The questions were easy. Easy, I tell you. TikTok bought the $150 put that expires on February the 20th. What is her break-even point? Those are the type of fucking questions that was on the test. I swear, I shit you not. Somebody says, what you trading? What we talking about? We talked about Walmart. Right now we talking about Alibaba. And I was just naming some key levels for them to pay attention to going into earnings, because they got earnings coming out. I'm also looking at the RSI and the volume. We got low volume, but the RSI is around 53, which is neutral. Again, that's important because it's not an overbought momentum melt up. It's not oversold. It wasn't a melt up like we seen with Walmart. So this is a range with potential. I trade range names with levels, not with feelings. I gotta go to sleep now. I hope to see y'all tomorrow. For sure, Lisa, you in the Discord. I saw you join. I got the notification. I'll see you there. So this is for the beginners. Whenever you see a stock in a range, you don't want to predict breakouts. I do, Big Ant. I almost called you by your name, man. Chill out. Yeah, I do, Ant 782. Micro futures though, the micro. All right, I'll hit you up tomorrow. Man, it might be Saturday actually, but I'll hit you up tomorrow. Yeah, I trade the micros. So listen, if Baba can reclaim and hold above between 158, right, to 161, we'll say. If it can do that after earnings, it's going to open the door for it to push back up towards 170, maybe even 192. But only if the price proves it. Okay? If earnings come out for Alibaba and it disappoint, or if it break below 144, then that's the market saying we not ready for the bulls. Like, it's not time for a bullish story, and you gonna respect that. As far as options, like the date window, the expiration date is broad for this to happen because the uncertainty is high. So the premiums is gonna be weird. But because we have discipline, we're going to either wait for the earnings reaction and then trade the direction, because it's going to be cheaper volatility then. Or we're going to use defined risk structures, and we're going to use a small size if you insist on playing that event. Right? And then what else? What was the last one on that earnings list? We got Alibaba. Oh, Deere. We got Deere. John Deere. We got John Deere. Deere, D-E-E-R-E, but the ticker symbol is D-E. So Deere matters because it's tied to agriculture, construction. Y'all see them big ass bulldozers and excavators and shit? So a lot of them made by Deere. John Deere, that is. I hope is it John Deere? So this is another real world spending situation again. So whenever DE is strong, it suggests demand for equipment and pricing power, is holding up. Whenever Deere weakens, somebody says, wow, Deere is on a run. Yes, John is right. Okay, just making sure, Junior. Yes, it is. But notice this wedge, man. I love wedges. So when I see wedges like this and it hit the bottom level of support and then it'll go up and hit the top level of resistance, it usually come down and hit that. It trades in a fucking wedge so perfectly sometimes until it doesn't. Even when it doesn't, we know it's not clearly because it breaks outside of the clear pattern that it was just trading in. And look at it on its way all the way to the top of the top of the wedge. It'll break the pattern eventually. You know what I'm saying? Who knows? But hey, it stayed within it for within a year, half a year, damn near, for 6 months. Even when it wasn't, it was treating the EMA this is why I use the EMAs too, ladies and gentlemen. The exponential moving averages act as a dynamic level of support and resistance within support and resistance. The price will bounce off of the EMAs as if it's a level of resistance. It's a dynamic. It will change. It's flexible. It's a lagging indicator, yes, but I pay attention to whether it's curling up or curling down too. So we got DE or Deere coming out with earnings on the 19th of February. So now you've got Walmart and Deere both clustered around the same period. And this is consumer plus industrial. This is not random. Okay, that's the market checking whether the economy is resilient from two different angles. They doing that on purpose. So on this chart, we got Deere around $598.86. It's basically vertical. It took the elevator up into the upper end of this trend channel. This is still a channel, but it's an expanding channel, but it's a wedge, right? So you got a major level marked around 534 that the price was previously treating like resistance, and then it ripped far above it. The EMAs tell the same story. The 9 about $530. The 50 EMA is around $484. The 200 EMA $416. That's a strong trend, but strength can become fragility when it's too extended. Motherfuckers take profit when it's too extended. The RSI right now, way over 70. Okay, what I tell y'all about an RSI over 70? The relative strength index, that blue line at the bottom, the chart at the bottom, you see at the very bottom of the screen, it's a blue line. That's the RSI indicator. Relative strength index. It's over 70. It's overextended. It's overbought. It don't guarantee that it's gonna come down, but a RSI near 76 is not subtle. It's overbought. Again, overbought does not mean shorted. Don't mean it's time to buy puts. It means don't be late. It means if you bullish, you're gonna wait for a pullback into structure, or you're gonna size down so if a snapback happen, it don't screw you over. And earnings literally is gonna produce a violent two-way move, right? So strong report can still sell off because everybody is already positioned the long way. I ain't talking about Pee-wee. So the market uses the event to take profits. You see what I'm saying? They use earnings to take profits. They know a lot of y'all finna, it's finna be a lot of volatility around that time. So why would I not? So again, because they already positioned, they've been in Deere since it was in the 300s, or back in last summer. Just hear me out so that you can be too. I want to show you how to trade this like you respect risk. I'd like to show people the difference between I like the company and this is a good entry. It's a difference between I like the company and it being actually a good entry. So they are not the same sentence, right? If Deere is extended like it is now, and if it stay extended into earnings, the highest quality swing trade is usually after earnings, not before. You're gonna we gotta let the report reprice it. Then I trade the first pullback to a known level or moving average, right? With the defined stop, meaning I know exactly where the fuck I'm gonna be wrong at. That's where my stop loss gonna be at. So if you insist on trading earnings season with this, if you insist on trading this the day they got earnings coming out, make it small. Because the name can gap hard and make your stop loss mean absolutely nothing. Yeah. Any questions? Any questions before I continue? So I'm gonna show y'all how to. I really want to make sure, definitely know what he talking about. Says FF. Thank you. I appreciate that. Thank you. So again, Walmart is the consumer. Alibaba is global risk mood and China sentiment, and then Deere is the real economy, equipment, and spending. If you pay attention to all three names, they matter because they are big, well known, and they can move the market narrative when they report. If they come out with some bad news, it can literally move the market. But it's the lesson is the same across all three of them. The levels, after I showed y'all all these charts, the levels matter, not your feelings. Okay, we need to seek confirmation. We don't get excited, and we need to make sure that we manage our risk, and we don't have to worry about hoping for shit. So my number one rule for my students during earnings season, if you don't have a clear plan with clear levels, a clear I'm wrong point, then you do not trade it. It's simple. You watch. If you do trade, you trade smaller than normal because the volatility is higher. Higher volatility means bigger swings. Bigger swings is going to mean bigger mistakes if you oversize them. It makes sense? Yeah, I'm always watching the Mag 7. So don't leave this stream thinking you need to go trade Walmart, Alibaba, and Deere immediately. Okay? I need you to leave this stream overstanding and understanding how to read a chart without needing to know fancy patterns and shit. As long as you know ceiling and floor, right? As long as you know the key levels, so support and resistance, break and hold, break a structure, change a character, okay? Range, overextended move, confirmation. That's your foundation. And again, one last thing before I move on. The market will always be here the next trading day. Your account might not be here if you trade this shit like it's a casino. You get what I'm saying? You picking up what I'm laying down? Drop a W in the chat if you picking up what I'm laying down. I'll wait. Hit the follow button if you picking up what I'm laying down. If you just came in, hit the follow button. I'm looking to get the 10K followers for this summertime. Somebody told me I need to tell people that a lot more because I don't say hit the screen. I've been talking for about an hour and I'm only at 1.5 likes. That's crazy. 1.5 thousand likes. That's crazy. That mean y'all don't love me like I thought y'all did. Let me stop playing. I don't give a fuck about them likes. What happens is, though, it pushes me out to the For You page, right? So when y'all tap the screen a few times for me, TikTok just shows it to more people, right? It helps the algorithm know that, okay, he's doing cool. We're gonna let more people see him. They give me exposure. But I want to say TikTok been on bullshit lately. Y'all shouldn't have to break a nail for more people to come in here. But it's cool. I know why they don't want everybody to see what I got to say. Because imagine if I had to taught this information to 1 million people today. What would that do to the market? What would that do to the market if everybody got this information? We build skills. We don't give a fuck about the cap. We not building stories. We ain't telling no tales. We make sure everybody got discipline. If I don't tell y'all nothing, I'm gonna tell you this. Discipline is not something that you have to be born with. This is something that it's a skill set that you can learn to have and gain. But you do need discipline, not desperation. Now, if you want me to take this further, the next section that I'm gonna talk about, as far as how to learn options, you can inbox me if you serious. If you a serious learner, you serious about this and you want to learn more, inbox me. Okay. I would love to help you. All right. So What do we got next? What do we got? I went over all those companies to deal with earnings. Let's talk about the market sentiment. It's information I found on Webull. It's all on Webull. I check it out almost every day. So this is like a market dashboard section. This is where I stop guessing and I start reading what the market. Who is this? No, thank you, Malik. What up, JB? It's like 1 o'clock where you at, ain't it? So yeah, this is what a market, pretty much, I get to see what the market is actually doing under the hood, right? I want to check engine light on. I want to see what's going on. JB, you just woke up and went and got a cold glass of water? Or you went and got something to drink? I need this, but taught at a beginner level. Well, I thought that's what I was doing. Am I being a little bit too advanced? Let me know, man. I'll tone it down a little bit. I thought I was teaching it at a beginner level. But if I get too beginner, then you know, it is 4 a.m. A lot of people will go to sleep on me. Yeah, a lot of people will go to sleep on me if I make it too simple. I bought some Webull today. Yeah, it's just down so low. It's like, what is going on? I still believe in the future of it though, JB. That's crazy. I'm about to now, JKB. I'm actually doing that now. So like I said, I like to come here and this is like a market dashboard. And before I explain it to you, I'm telling you right now, most people lose money because they only look at price. They see red or green and they start reacting emotionally. I think it is Jug my slat, and they didn't pay me to tell you that. Professionals don't do that. They don't see red or green and start reacting emotionally, right? Iron worth traders, I make sure I teach y'all to look at the price. Yeah, look at the price, sure, but also look at the flows, look at the sentiment. We want to look at the futures. I'm looking at the futures before the market even opened, because it's going to tell you what kind of day it might be before you start throwing money at contracts. Y'all ever notice that? Y'all ever notice that the futures is down bad, and what do you think the fucking stock market is going to be up the next day? That same day? Are you like, I think this is like some of the easiest money to make sometimes once you grasp that concept. It ain't guaranteed, but how many of y'all saw the market, saw that futures was up, and it just led you in the right direction in the stock market? Have y'all ever tried that before? This is not financial advice. This is for educational purposes only. And it don't always work, but how many of y'all have actually tried it? I just want to know by show of yes or no. By show of I have or no, not yet. I'll wait. Pay attention to it now if you haven't. Jug, start watching the futures and pay attention to the futures in correlation to the stock market. Because those things tell you what kind of day it might be. Now, right now on this phone, I chose to go live from the cell phone tonight. You know, I've been going live from my desktop a couple nights in a row. It works. It's fun and all, but I like going live from my phone too, so I'm not trapped to have to just be in my office. All right. So, anyways, I'm not able to point at anything. So I'm gonna use my words to guide your eyes. Okay, you got to use your imagination tonight. I want you to follow the screen with me so I can translate every part to you like you brand new. I'm about to explain it to you, Jug my slat. Like when you see the futures down, then pretty much the market is probably more than likely about to go down that same day too. And I'll explain that more in detail in a second too. All right, so if you confused, it just means that you early in the process. Y'all just ask a question. Confusion is the starting point, okay? But discipline is the destination, right? So we're looking at the market overview right now, and you will see something called net inflow, right? That's what we're looking at, the net inflow. Might be behind my name, so it's hard to see. But you are going to see 3 labels. We got the NASDAQ. Whoa. Keep going live. Turning your camera off. Show static images or being long may be ineligible for the For You feed. See, TikTok is like, oh, you're showing them images and blah, 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 blah. I don't know. Whatever TikTok. Let me see. Maybe I gotta show my hand or something in the live so that they can see my camera is on TikTok. Okay? It's Black History Month, TikTok. Don't do this to me. Don't do this to me, TikTok. It's Black History Month. I'm here. The fuck? Anyways, don't do that, TikTok. Y'all see how I had to make it about race so they could leave me alone? Typical, you know what? All right, I'm just playing, y'all. I'm just joking. All right, anyways, I was going over the net inflow before I was rudely interrupted by Tickety. You see these three labels. You see the NASDAQ, you see NYSE, the New York Stock Exchange, and then you see S&P 500, which is Standard & Poor's 500. Okay, and the NASDAQ, don't make me fucking tell you what that means. I just know that that's the technology stocks. So you're going to see the numbers next to them, right? Let me define net inflow in regular language. Net inflow is basically tracking whether more money is flowing in to buy stocks or more money is flowing out because people are selling. Do you understand? Do you understand? I'm trying to, do I need to say it again? I said it again because y'all have to engage. Whoever tapping the screen, I know it's JB because wasn't nobody tapping before you got here like that, JB. I was at 1,000 likes before you got here. Yes, they get it. Thank you. Pretty simple, to be honest. Yes, it really is, Jug. It really is. We don't need to make it complicated, you know? We really don't. So think of it like a tub of water, right? Think of it like a tub of water. If the water is pouring in faster than it's draining, right? That's the net inflow. If it's draining faster than it's pouring in, that's the net outflow. Now on this screen, the NASDAQ is showing a negative number. Like, what's that? Negative 200 million. Negative means outflow. That tell you that money is leaving the NASDAQ side more than it's coming in. Right? NASDAQ is where you tend to find, again, the technology stocks, the growth stocks, the risk-on stocks, meaning stocks that usually do well when people are confident and they willing to take risk. So if the money is leaving NASDAQ, that's a blues clue. That's a face high. That's a clue. It's showing me that the risk appetite is lower. Yeah, what up, P? So risk appetite is just a fancy way of saying people aren't feeling brave right now, ladies and gentlemen. All right, so then you'll see the New York Stock Exchange showing a positive number, like 800 million. It's plus 800 million. Positive means inflow. That tells you that money is flowing in on the New York Stock Exchange side more than it's leaving. So don't oversimplify this shit. All right, that doesn't automatically mean that the whole market is bullish. It could mean rotation, right? Money got to move around. Rotation is when money moves from one part of the market to another. Right? Y'all with me? Whoever asked me to simplify this shit, is it simple enough? I know I don't need to make it more simple than that. He said, Trey, bring your simple ass across the street. How did you get to this chart? Okay, when you on Webull, you should just go to markets and you'll see some options at the top if you on your cell phone. But I mean, you can find the same information on the desktop version too. You just got to add it as a widget if I ain't mistaken. But this is on a cell phone under stocks, and then you'll see like market overview. Sometimes, and you might be under the light version too. Make sure you're not in the light version of Webull, because there's two different versions, light or like advanced. Yeah, this is daily, Duke. You can find this information out daily. So, for example, as far as rotation, money can leave technology stocks and go into more defensive names, right? Like war stocks, companies that people consider more stable during fucked up times. Okay. So now you also see the S&P 500. See, I'm seeing some shit, and I got a notification now. Coin is up 5% to $148 during pre-market. We'll talk about Coinbase in a second, but yeah, the S&P 500. You see that as well. That's down around -1.5% on this screen. So put that together in your mind, right? The market is red overall, and the NASDAQ is getting hit harder, while the New York Stock Exchange is showing inflow, right? That usually means that the market is not just selling everything equally. I thought about buying some coin. Well, Joe, yeah, JB, I think it's a good time. This is my opinion, though. I think it's a good time. Now, this also could mean that people are dumping the higher risk names and either moving to safer pockets, or they just rearranging their exposure. But hear me clearly. Hear me clearly. See, y'all gotta have the spirit to hear it. You gotta have the spirit to hear it and the mind to clear it. I need you to hear this shit clearly. This inflow and outflow screen is just not a magic prediction tool. It's just context. That's all I'm using it for. It's like checking the weather before you decide to, figure out what you're going to wear. But that shit don't always be right. It ain't going to guarantee what's going to happen next. It's just going to help you avoid being surprised by whatever the fuck is waiting on you outside the door. Any questions? But yeah, you're going to see this range throughout the day. And look at how the lines move differently. Like when one line is falling harder and one line is stabilizing or rising, that's not random. It's telling you different groups of stocks are behaving differently. So this matters for options and futures traders, because you're not just trading, quote unquote, the market. You trading which part of the market is being punished or rewarded. Right? So I'm looking at both of them. The S&P flow is the largest composite of the three lines. Yeah, the money came from one and went to the other. What's that orange line? Okay, hold on. Hold on, y'all. My bad. I didn't know y'all was going to ask me them questions. The blue line is the NASDAQ. The orange line is the New York Stock Exchange. And the gray line is, what's that? S&P 500, sorry. So it's actually the opposite. But the New York Stock Exchange have stocks in the stock market in it. The S&P 500 has companies or stocks in it that's in the stock market as well. So they both are indexes. Because the S&P got it's an ETF, but it got all the best companies in it. Well, not all of them, 500 of the best companies in the United States. The largest, the best, the biggest, the largest face side. No, for real though. For real though. So I also want to explain this at the bottom too, but I just had to get past why these lines move differently. Like they're just telling you what's going on. You know what I'm saying? So rookies, they see the S&P down. Oh, this is Webull, Melanie. Webull. So people see the market down, right? They'll see the S&P 500 down, and they will assume that every stock must be down equally. Is this a futures chart or a historical trend? It's neither. But I guess you can say historical, but it's something that you check on a daily basis. This information is going to change, of course. Like I said, it's just a way for you. It's like a weather channel. All right. So again, This is not true. Just because you see the S&P down don't mean that every stock must be down equally. This index is an average. Do y'all remember how you come up with an average? Do y'all know how an average is determined? So the index can be down while certain sectors are up. You see what I'm saying? The index can be flat. So if I take 10 people and one person weigh 400 pounds, but one person weigh 50 pounds, but we come up with an average number and you think everybody in there weigh the same amount, you tripping. That's not how averages came. We got to get everybody weight. And then we can come up with an average. Right? Put them all together, divided by 10. Y'all with me? Any questions? Am I making sense, or do it just sound like I'm just blabbing? I know I got to try to make it simple. That's where the brains come in, at making it simple. But again, the S&P is it is an average, okay? So that's why we look at participation. We want to look at how many stocks are actually moving in the same direction. That's why we look at the flows. So when NASDAQ is showing outflow and the NASDAQ line is weak, I'm automatically thinking, okay, technology and growth are under pressure. So I also know that I like to buy whenever something is under pressure too. Thank you, JKB. I like to buy when something is under pressure. That means if you're a rookie buying calls on technology while the market is risk off, you are swimming upstream. If you still can make money swimming upstream, but it's harder. And you need better timing. You need a smaller size, and you need to get out faster, like a quicker exit. This is great information, learning a lot. Thank you, Jim Ed. I'm glad you are. Congratulations. Congratulations to anyone in here that is learning a lot. Is you learning stuff that, man, other people pay thousands of dollars for. I've given this information out to people and for hours of my life that I'll never get back for $250, and they had the audacity to ask for the money back. After they learned way more than I've taught y'all in here, and I know that I've taught more than $250 worth of information in this live stream. I dare that lady. And I might talk about her for the rest of February, but I ain't gonna say her name. That way, if she do take me to court, she might be in here now. What do you think about SPY tomorrow due to being closed for Monday? Well, I got levels for SPY. What do you teach? Historical analysis as Expose FX. I teach it all. I teach what needs to be learned. You know what I'm saying? And I'm not being cocky or arrogant. I'm just confident. Now, let's look at the market sentiment part, because I need y'all to know what that means too. Scroll your eyes down in this same screenshot, right? You see where it say market sentiment? So we treat this like a gauge. We treat this like a gauge. It's not an interview, Expose FX, but about 3 years. 3 years. Trading, investing longer than that, but trading and investing is two different things. So now when you see the fear at 39, look at that. Y'all see where it say 39 and it's labeled as fear? I'm going to define sentiment so y'all get what this means as well. Sentiment is how the crowd feels. It's how the crowd feels. JKB says, is this a weekly view or daily, or what time frame? Yeah, these come out daily. You can see this daily, but it also says week. It says day, week, month. You can also change the time frame on this as well. So go on Webull and check it out. It's completely free for you to get on Webull and look at this information. Also TikTok. Stay on TikTok for now. Stay on TikTok forever. TikTok will get mad at me for telling y'all to go somewhere else too. It's crazy. LOL, I've been trading since 1988, professionally since 1994. You don't know what you're teaching. Well, guess what, old man? This shit wasn't here in 1988. This shit wasn't here in 1994. You couldn't look at this information except for inside a fucking newspaper. Okay? You have to look in a newspaper to look at the shit that we got to look at. Now, don't make me disrespect my elders, Expose FX. I'm about to have to mute you. You getting muted. You getting muted. I ain't blocking them TikTok. No, I don't want to block them. I just want to mute them. JB, no disrespect to your generation, but what's up with them men from your generation? Like, what the hell? He had to look in he could not get on Webull in 1988 or what other year he named? Did he say 1988? What else he say? I don't even see the comment anymore. I don't even see the comment. All right. Anyways, that was crazy. Sorry, y'all. So according to him, I don't know what I'm talking about, but I haven't spoken anything but things what I know what I speak of, which means he don't know what the hell he talking about. Get your old ass out of here. Go take some Bengay or whatever the hell it is you need. Take some high blood pressure medicine. I ain't gonna come at your high blood pressure because I get that shit too sometimes, but you better get the hell on. Well, you probably got a big ass bald spot and your hairline the shape of a C-cup hairline having that. Let me stop before TikTok get me for something I'm not even doing. TikTok, we do not promote bullying or harassing over here. We love TikTok shop. Let him in so we can hear what he's talking about. I'm curious. Okay. You right. I'm gonna let him speak. You right. Let me let him in. What do you think about SPY tomorrow? I already answered that one. Now I'm reading comments I already read before. You funny, but we got respect. No doubt, JKB. I don't mean no disrespect to all my older people, y'all. If y'all got bald spots, I ain't mean no disrespect to all the people out there with bald spots. You are welcome. But if I had a big ass bald spot, I'll be quiet. You feel me? I'll be humble as hell, G. Like one day I might have a big ass bald spot, right? If I got a lace front or a man piece on, I never put no fucking man piece. I'm going all the way bald. If I ever get a bald spot, it's over with. You gonna see me out here like Michael Jordan, Tyrese. I'm gonna look like all of them. But anyways, fear 39. What does this mean? When the fear is 39, what does it mean? All right. So the sentiment is how the crowd feel. It's not what the fundamentals say. Not what the long-term value is. So this is some short-term shit. It's literally crowd emotion. Fear or confidence. That's all we want to see. And it is measured by certain market indicators. So when you see the fear at 39, that just means the crowd is leaning fearful. It's not extreme panic. It's not calm either. What up, JoJo? So it's not calm either. It's either a risk off move whenever it's at this level. It's like, yo, be careful. And on the right side, you might see pre-day 35 fear, pre-week 41 neutral, pre-month 40 fear. That's telling you the move has been leaning cautious recently, not just for 1 hour. Okay, so the most important lesson I want y'all to get that fear is not automatically bearish. Fear can actually create an opportunity for us, right? Why? What are we supposed to do when everyone else is fearful? What should you be doing when everyone else is fearful? Yeah, JoJo, they getting on my nerves. So when everyone else is fearful, fear is what pushes people to sell too fast and too low. Fear can make stocks oversold. Oversold means the price dropped faster than normal and it might be due for a bounce. That's why this screen even says something like this may suggest the market is undervalued or oversold. But this where discipline come in at. Fear does not mean buy now. For me, it means I'm going to tighten my plan and I'm going to watch for confirmation. But fear can also be the start of something bigger. So pay attention. Like the market can go from fear to panic if some shit happen. It's too close to panic. So the correct mindset to have is this is just a mood indicator. Jojo, I don't know how long you got, but thank you for coming in case I don't get to read your comment. Thank you for coming in. I know you be coming in and going. TikTok, I'm live. It's okay. I'm here. TikTok want to see me so bad. TikTok want to see me so bad. All right. They keep on warning me that if I don't show myself, they're going to get me out of here. Now, I'm going to go to another. Let me see what else I got. So y'all see this? Y'all see this stuff at the top? You see let me see where we at. I'm gonna actually switch to this one. Right here. All right. So do you see how it shows the market tabs for the United States, and then you see the three big index boxes? You got the Dow Jones, the S&P 500, and the NASDAQ. You notice how all three of them red, right? JKB said, when you look at this, what you think of NASDAQ? I think that the technology stocks, they always come out of nowhere and they start going like, they go parabolic. People just jump in on and they wait till the top. People are interested in shit after it already went up. Sorry, I got a little distracted because JoJo started showing love with the gifts. Thank you, JoJo. I appreciate it. But yeah, so people don't pay attention to this shit while it's down. They don't pay attention to it while it's being oversold or undervalued. They want to look at this shit while it's already up. So that's what I think when I see that, if that answers your question. So the Dow Jones, S&P 500, and NASDAQ, all three red. You can see the percentages too. The Dow is down about 1.34%, S&P is down about 1.57%, and the NASDAQ is down about over 2%. Excuse me. Now, this is the simplest but most important translation. Whenever the NASDAQ is down the most, the pain is concentrated in technology and growth stocks. That's where the pain is concentrated at, right? Excuse me. When tech and growth are the ones getting hit, it usually means the market is worried about rates, is worried about inflation, or earnings expectations. So things that pretty much pressure the future profits of these companies or ETFs, or the companies in those ETFs, right? So because growth stocks are priced on future earnings more than right now earnings. So when people get nervous, they sell the future first. So if you trade in stock options, this is why QQQ and a lot of technology companies or stocks or whatever, they feel like roller coasters on days like this, because they are more sensitive to the macro narrative. Now you see these little mini charts that's up under it, that's inside each index box. You're going to see a flattish start, right? And then a drop, and then a chop. That's the signature of a market that got hit and then it started battling. The battle means that the buyers tried to step in. The sellers kept applying pressure and the market couldn't recover smooth. So that kind of day creates two types of traders. You're either going to be a disciplined trader who waits for clean setups, or you're going to be an emotional trader who chase every bounce, and you're going to get chopped up. Then I'm looking at the futures. I also want y'all to know, some of y'all don't trade futures, never heard of them, don't know what they are and why they matter for tomorrow. All right, thank you for following me, Nerd Command Podcast by Michael. Appreciate that. So now look lower on this screenshot. You will see futures, right? You see the E-mini Dow, the E-mini S&P, and the E-mini NASDAQ. And then you'll see a small percentage changes, like a fraction of a % on each one. All right. So futures are contracts that track the major indexes, and they trade for more hours than the regular stock market. The regular stock market opened 9:30 to 4, 9:30 a.m. to 4 p.m. Futures is open 23 hours a day, except for Saturday is closed. Jim Ed says, does the volume play a part in judging how you enter a trade? Yes, it does, Jim Ed. Sometimes, most of the time, it helps me exit as well, too. But yeah, so futures are contracts that track the major indexes. You can also trade oil futures, corn futures, stuff like that. Gold, silver, copper, even Bitcoin, right? So futures give you clues about how traders are positioned before the market even open and how they reacting after the market closed too. They're not perfect predictions, but they are the market's. I use it like a market, early heartbeat. What's up, LeBron? LeBron James. Here's another thing. When the regular market had a big red day and futures are only slightly down afterward, that can mean a few things too. So that one thing that tells me is that the selling pressure slowed down, right? So the market is catching its breath. Another possibility is that traders are waiting for something else to happen, right? Like inflation data before they make their next big move. Both, though. If you pay attention, if you trade futures and not stock options, I don't get it. If you trade stock options and not futures, I don't get it. It is what it is. I just don't get it because they kind of connected. Whenever you trading the index, you know what I'm saying? Is there an app you use for predictions, news prior to the start of the day? Let me see. I'm actually using Webull, Melanie. Webull got links to Bloomberg or Yahoo Finance. They have a built-in AI. They need to pay me. I feel like I just be pushing people towards their platform and they don't pay me shit. But you know your product good whenever the customers do all the advertising for you. I'm new to this. Maybe strange question. No, it's not a strange question, Melanie. I just had to sit back and actually analyze it and think. I don't have a special place that I go to. Like some people get on Twitter. It's so much information everywhere. You can live, man, Twitter, if you're not on the wrong side of it, if some people get on there and all they see is corn, you know what I'm saying? And I mean that with the P and not a C. But if you get on there, it's a lot of information on there. It's a lot of people on Reddit that sometimes know what they're talking about. But yeah, Bloomberg, Yahoo Finance, CNBC, I think they good. I don't use those people though. I don't like knowing what those analysts think because I feel like this is gonna sound arrogant, but yeah, I feel like they ain't got shit on me. So I don't even care about what they think. I'll look at the chart. I'll decide. I'll do my own research on the company, and I decide whether it's good time for me to buy, whether it's time for me to buy or hold or sell. But some of them are experts, like that guy that came in here and was like, I've been trading since 1988 and 1994, and you don't know what the hell are you talking about, you young jitterbug. Get your old ass on. Respectfully. I don't listen to them old geezers. Them old geezers. They on their way out the door. They don't even want me. They don't want nobody like me to get a leg up. I'm sure once, because I'm going to come. I'm Robin Hood for real, for real. That was one of my favorite stories. Wait, did I just see Netflix at $75? Yeah, but JB, when I see that, I really know it's like $750 worth for real. Are you on YouTube or have a website? I can follow you and I can follow when you're not on TikTok. Yes, you can join my community. There's an app called Discord, and you can join me on there. You can subscribe to me on YouTube too. Yeah. The link is in my bio for all of that. anything you want that got something to do with me and getting closer to me and learning more from me, just hit that link in the bio or inbox me. Wait, what? Yeah, JB, you know they had the stock split. So whenever they have splits, I'm like, I still know that company is worth as much as it was. They just had to put the water on, like they had to water this shit down before it's set afire. Like it was already on fire. Netflix was $1,500 a share last year. Was it 1,500 or 1,300? One of those. And it worked its way up from $190 to $1,000 within 2 to 3 years. And then they did a stock split. Yeah, JB. When it was like $1,000, I think it was $900, and then they brought it all the way down to $90. So it didn't drop from 1,000 to 90. It did like a stock split where if you had one share that was worth 1,000, you now have 10 shares that's worth $100 a piece type of situation, because it brings more investors. The price was just too fucking high. They got other reasons why they do stock splits too. Yeah. So again, you got to pay attention to futures. I like to use futures because it lets me know, just because some shit can look calm right before something can be explosive, it lets me know what's going on before I make my next big move. So the futures are the setup. It's not the signal. It's just a setup. Yeah, Robinhood stock. I'm going to talk about that in a second too. I'm going to bring that up. I still got Robinhood to talk about. I still got Lyft to talk about. And I still got, what did I say? Robinhood, Lyft, and Coinbase. All right, I'm just kind of slow with it tonight. It's almost 5 o'clock, so let me speed it up because I know some of y'all at work, probably about to get off work, probably going to sleep, probably just woke up, whatever. I ain't been to sleep yet. I couldn't sleep, so I decided to come on here and teach. This is what I do sometimes when I battle insomnia. All right, now, it's also when I'm the most creative, too, is in the middle of the night. I can't help it. So a signal will ruin you. You want, I pay attention to like the setup, right? The setup is going to tell you what you might be walking into. A signal is what price does when the market actually opens and the liquidity is real. Liquidity, if y'all ever heard her pretty name before, liquidity. Can you imagine naming your daughter Liquidity? That's crazy. That's crazy. It's ghetto. It just sounds pretty though. Liquidity is just how easily, I'm gonna name my dog Liquidity when she has her puppies. Liquidity is just how easily buyers and sellers can trade without huge price distortions. Liquidity is higher during market hours, right? That's why you don't treat overnight futures like it's the same as the cash market open. Liquidity. So look, like if the NASDAQ outflows are negative, NASDAQ is down the most and the sentiment is fear, right? If we see NASDAQ, if you're looking at this and you see the NASDAQ down, okay, the most, but it's not. But if we see the map, we know what the fear is. We're going to posture ourselves defensively, right? That means smaller position size, fewer trades, more patience. You want to prioritize the cleaner setups. Jim Ed says it's liquidity and volume the same. Not quite. Not quite, but almost, right? Because a lot of volume equals good liquidity. Low volume equals no liquidity, right? So if there's, let me give you an example, Jim. Let's say you got a garage sale going on, and you got a garage sale, but you're not on a busy street, man. You on a ducked off side street. Ain't nobody even coming down the street. You probably got like two cars per hour, right? It's going to be hard for you to sell shit if it's only 2 cars going by. It's low liquidity, low volume. But up the volume, right? You got 10 cars every 10 minutes. It's going to be easier to sell. You got higher volume. It's going to be higher liquidity, more liquid, more cash. Did that make sense, Jim? Let me know if that helped you out, pal. Anybody else, correct me if I'm wrong, so Jim can know I ain't teaching him bullshit, since we got other Rip Van Wrinkly ass men in the comments thinking that they know something because they was trading back in 1938. Thank you, Melanie. Yeah, because you need to know, like, it'll be harder for you to get in and out of a trade if there's low liquidity. All right, so in this kind of environment, the market love to do this. It'll drop hard, then it'll bounce because it's gonna trap them late sellers. People try to get in late as hell. Now they want to buy puts, or now they want to press sell. You too late, big fella. Right? Then it drop again to trap the people who tried to buy late. It's called a chop. A chop is when the market moves back and forth, up and down, right? It consolidates. It really ain't got no clean trend. You can't even, hell, when it's consolidating, I can catch it. Sometimes it's doing worse than that. You're going to get chopped. You think it's going down, it's going up. You think it's going up, it's going down. And when it's supposed to go down, it go up. And when it's supposed to go up, it goes sideways. You're going to get chopped. It will destroy an impatient trader. So if you knew and you don't know what to do in the chop, I have an answer for you. I can help you. Do less, motherfucker. You don't get paid for activity. You get paid for precision. JB said, well, what is happening? Why are we dipping so low right now? The orange man? Of course, man. You know the orange man got his finger on the button. Russia's supposed to be accepting the United States dollar. We got we got threats of a government shutdown, JB. You know how the news is. That wasn't really in everything. You know, this is nothing, JB. This shit happens to you. Seen it. This shit happens today, and we'll be right back to 797. We'll be right back in that red rectangle at the top by next week. I'm not guaranteeing that. I'm just saying, you know how we look at it. It's done it before. Look, 1, 2, 3, 4 times in the past 3 months, it has dropped to lower than where it's at now, only to fully recover and go to a higher level. Yes, Jim Ed. Yes, you buy a put when you think the price is going down. You buy a call when you think the price is going up. You call your buddies up, Jim, and you put the phone down. It's simple. It's simple. So in this kind of environment, you might get chopped. So the cleanest professional move going into this next week coming up, or what we got going on tomorrow, you want to, this is major inflation data on the way. So you want to respect that today can be wild. I'm going to stop saying tomorrow. It's today. Today might be wild. We got CPI information coming out. It could be wild spreads. They can be, the candles can move faster. The options pricing might get expensive. Today it's going to cost more for you to trade. So you either plan this day like a sniper, right? 1 or 2 high quality trades, or you going to wait for the reaction after the data come out and you trade the second move, not the first spike. You understand what I'm saying? Y'all get me? Top options. You can find this on Webull too. We're going to get off into one of the most misunderstood parts in option trading on Webull is when they see the top option screen, they don't know how to use this shit. But don't get excited though. This does not mean that these are the best trades. I had to learn that the hard way. This screen means this is where unusual activity is showing up. Okay? So unusual activity can be smart money or it could be dumb money. It could be hedging or it could be market makers doing some type of inventory work. You got to be careful with this shit. So if you look at this screen and you automatically buy what you see, you have a gambling problem. Call that number on FanDuel for the gambling hotline. We are not gambling. We learning how to interpret clues. Blues, clues, blues, clues. Face for real. I speak to y'all like you brand new. So an option is a contract. A contract is an agreement. When you buy an option, you buying the right to buy or sell a stock at a specific price by a specific date. A call option benefits when the stock goes up. A put option benefits when the stock goes down. Now, I'm saying benefits, not guarantees, because options are affected by different variables like time and volatility. That's why people can be right about the direction and still lose fucking money. Okay, options are not just direction. It's a direction plus timing minus price times fucking, it's complicated. Literally. Implied volatility, open interest, the delta, time decay. You want to look at the theta. Like, it's so much you need to take into account. Not to mention the orange man. So at the top, it says top options. And we have open interest, which means, we have open INT. That means open interest. So open interest is another big term, but it's simple. Okay. Open interest is the number of open contracts that currently exist and are still open. Don't never be confused when you see open interest anymore. Coach Price said that open interest is the number of option contracts that currently exist and are still open. Because that's what it is. Think of it like this. The volume going to tell you how many contracts traded today. Open interest is going to tell you how many contracts are still on the board as active positions. So if the open interest is high on a strike price, it usually means that a lot of people are sitting in that contract and they are holding it, right? Like a crowd standing in the same place, right? So on this screen, you see a list of symbols. We see strikes. Like, for example, I'm looking at the $10 grab call that expired January 15th, 2027. Grab, $7.50 call that expires in 2027. These are leaps. Those are leaps. A leap is when it expires in a year. Still swing trades, but they expire next year, right? Next to those numbers, we see things like the open interest, 223,000, 175,000, blah, blah, blah. You also see the volume on the other side of it too. So the left side tell you the contract, the middle tell you how many contracts are open, the right side tells you how many contracts traded today. So this is not just what's popular, it's literally where positioning exists and where activity happened. This is what I need to learn. Yes, it is, Jim Ed. I like to try to teach what people need to learn. So I like to teach also how to read a line like when you see NVIDIA $200. You see where it say NVDA 200? NVIDIA $200 call. It expires March the 20th in 2026. That means that this is a call option on NVIDIA with the strike price of $200 expiring March the 20th, 2026. The strike price means the price that the contract is tied to. The expiration means the deadline. So a call just means you think it's going up. This is a bullish contract. That means the holder wants the stock price to go up. So the important part, open interest does not tell you and me if they bought it or sold it. That's the trap. Jim, that's the trap. People assume high open interest mean everyone is bullish. That's not true. Okay? In options, there is always a buyer and a seller. Somebody owns that contract on the long side. Somebody is on the other side of that, on the short side. So high open interest means heavy positioning. It's not a guaranteed direction. It's not a guaranteed direction. So what do we do with it then, coach? If it's not, what the fuck we need it for? We treat it like a map. It tells me where the market is crowded at, right? That's why high open interest matters I'm using it like a magnet or a battle zone, okay? Any questions? Did I miss any questions? So whenever the open interest is high at a strike, that strike can become a magnet. And someone sells to hedge a buy that they hedge from their portfolio. It's 50-50 really. Right, Wolf House. It is, but again, I'm going to explain to you why it matters though, because you're right. So whenever the open interest is high at a strike price, right, that strike can become a magnet. You ever seen that happen? 1776? You know how a magnet basically a magnet means that the price likes to get pulled towards that level because there's a lot of hedging activity around that area. That's exactly what's his name? Wolf House just explained. Someone sells to hedge. It's exactly, I told y'all 2 steps ahead of Coach Price tonight. Y'all bring it up right before I get a chance to say something about it. That's right, Wesley. That is right. How do you use unusual contract activity, Wesley? So, hedging is another big word, ladies and gentlemen. Hedging just means big traders and market makers, they adjust their risk as the stock price moves. It's simple. If a stock is near a big strike with huge open interest, the people on the other side of them contracts, they may be buying or selling the shares just to stay balanced. That's gonna be the only reason why they're doing it. If I think the stock market finna crash, I'll, or if I'm invested in the stock market, but just in case it crashes, I'm going to hedge my position and buy gold, or I'm gonna hedge my position and buy crypto, right? This is how it's hedging. That's all hedging means. So this can create price behavior that feel weird to you if you're a beginner, right? Like you see the price stalling or snapping or pinning near a number, you're going to know why. So the way you use open interest is not to blindly buy it. Somebody says, yes, you are correct. And my legs got long and confusing now. I keep it a little simpler. Right. Keep it simple. There's no need to overcomplicate things nor oversimplify them either though. We don't want to oversimplify it either. We don't want to blindly buy it. We do not want to use open interest and blindly buy it. So we use it to mark important zones. If NVIDIA got huge open interest around $190 and $200 calls, that tells you those price areas matter in the options market, that is. It don't tell you that the stock gonna go there tomorrow. It just tells you watch these levels because a lot of contracts are anchored there. Do y'all understand? Who is still confused about volume versus open interest? Wesley Fancher says the volume will tell you what to buy. Who's still confused about volume versus open interest? If you're not confused, hit the follow button. If you are confused, say I'm still confused, coach. If you got it, drop a W in the chat so I can proceed. I know some of y'all shy, so I'm just going to go ahead and act like some of y'all don't know what volume versus open interest is because I know you might not tell me. And I got you. I'm here for your what's that word? Introverted ass. I got you. Open interest is good to pair with Fibonacci to confirm zones, buy or sell. Either way, that's the spot. Still confused, says Iggy. I got you, Iggy Herrera. So let's make it super simple. Volume is what happened today, Iggy. Volume is what happened today. Open interest is what exists overall. If you see high volume but low open interest, It could mean a lot of trading happened, but not many positions stayed open, right? If you see rising open interest over time, it could mean new positions are being added and the crowd is growing. That's why I like to teach it like this. Volume is the noise of the day. Open interest is the footprint of positioning. So open interest is like whenever you see a lot of open interest, okay, that's like a club. You go into the club and there's a lot of people in there. You can get in and out that club without somebody noticing you. It's not hard to get in and out. When there's only 2-3 people in that club, though, it's awkward, right? They notice you. They ain't trying to let you leave, okay? So, again, open interest is the number of option contracts that currently exist and are still open. Volume tells you how many contracts traded today. You're more than welcome. So this screen is good for building a watch list. It's also good for knowing which tickers are being traded heavily in options. It's also good for identifying where the attention is and where the big strikes are. But this screen is bad for making a trade decision by itself because you don't know the story behind the trade. A big call position could be bullish, but it could also be somebody selling calls against shares, which is actually a neutral to bearish income strategy. A big put position could be bearish, or it could be a hedge to protect a long stock portfolio. So if you see puts and you panic, you're not thinking like a trader. You're thinking like a spectator. A spectator type. Would you need to look at the candlestick and compare it to volume? Sure. Sure, look at this one. Look, I clicked on turnover, right? You see how I say turnover at the top, right? Turnover is basically showing you where the most money is moving through contracts. And it's usually tied to big price changes in the option premium. Somebody says, fuck it. Microsoft calls it is. I like to sell calls and puts against my long positions here in this zone for premiums. Makes sense, Wolfhouse. I like to do that as well. Me personally, like if I like to buy shares by the hundred, so I do cash secured puts on my favorite companies. Because at the worst that could happen is I get 100 shares of this company for the low. Volume is today's traffic. Open interest is the total number of open tickets still active. That's right. Y'all so smart. And turnover is basically showing you where the most money is moving through the contracts. So on the screen, you see APP, $600 put. INTU, $490 put. INTU for a $700 put. Coin, $310 put. That's Coinbase. Coinbase, $320 put. Blah, 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 blah. Y'all see percentage changes. And you see the mid price like $232.90 at the top right. And under that, we got 92 and so on. So let me translate what this means. These are put options. Puts benefit when the stocks drop. Any questions? Let me make sure I'm missing no questions. So puts benefits when the stock drops. The percentage change is telling you the contract got more expensive. Right? That means that traders were paying more for protection or for downside bets, either one. And the mid price is basically the middle price between the bid and the ask. So this is like a rough, quote unquote, fair price estimate on that contract. Now, this is the most important part about this whole turnover rate thing that I'm showing y'all. When puts explode in price, it doesn't automatically mean that the stock is going to crash tomorrow. It just means that fear or demand for downside exposure just increased. So the market is repricing the risk. Repricing the risk gonna mean that the option premiums is gonna rise because the market expects bigger moves. So why should someone buy a put? So you should buy a put if you think that stock is gonna go down and you want to profit. That's obvious. Reason number two, though, you already own the stock. You already own that stock. You already own hundreds of shares of Coinbase, right? Think about it. You already own that stock and you want insurance. You want to make sure that if that stock goes down, you don't lose money. You get to make money and it'll cover what you lost on your long position. Drop a W in the chat if you're picking up what I'm laying down. I agree, Wesley. I agree. So insurance means if the stock falls, that put can offset the loss. Now, reason number three that somebody would buy a put if they trade in volatility. They're not trading the direction. Volatility trading means that they believe a big move is coming and they just want exposure to that move. So when you see a list full of puts getting more expensive, like these coin puts and them app puts, you are supposed to interpret it as the market is paying up for a downside risk or the market is hedging. It's a fear signal. It's not a crystal ball. It's not a prophecy. Now, after I see a screen like this, I'm going to share my process with y'all after y'all hit the follow button. I'm going to wait for these people who haven't hit the follow button yet to hit it for me before I share my process with y'all. Doom, 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 doom. I'm going to wait. I got a couple more people I'm looking at. You ain't hit that follow button yet. I'm about to share this strategy with you, this 4-step process that you should do after you see this screen. Cool whip. Cool whip. Cool whip. Cool whip. This is the top options section on Webull. All right, y'all. I'm going to stop stalling. Since the people who did follow still here. I got 40 followers tonight. That's pretty good. That means I should be at about 8K now. All right, so I'm going to give you my process, and I want you to follow this every time instead of just jumping into a trade, right? So the first thing you want to do is I want to identify the ticker. Puts on any software company right now, says Wesley. I'm getting fatigued now. I couldn't even laugh as hard as I wanted to, Wesley. Honestly. So step one, identify the ticker. You need to ask, do I even know what moves this stock? Is it earnings, right? Is it a crypto price that's moving Coinbase? Is it the market sentiment? Is it news? If you don't know what moves it, then you are not ready to trade it. Step two, you want to check the chart. You're not trading this screen. You trading the price if you trading this shit, right? So the chart is going to tell you the trend, the support, the resistance, and whether that stock is already extended. Step number three, I'm going to check the event calendar. I want to know if earnings is near. You need to know what's moving this shit. If the earnings is near, the options are going to be more expensive. If you can catch it before earnings, by the time, excuse me, yeah, it's almost that time. By the time earnings is near, it'll be a lot of volatility. The options will be more expensive. If CPI is near, like it is today, the whole market can swing. So if there's a big event, the options can move crazy, man, crazy body, even if the stock doesn't move the way you think. Step number 4, you need to decide your strategy. If you are new, you either stay small or you wait for confirmation after the event is over with. Because the fastest way to lose money is to buy expensive ass options whenever there's a lot of uncertainty in the market. Then you're gonna get crushed by time and volatility. So look at NVIDIA showing up with big open interest at 190 and 200. $200 calls out till March 2026. Somebody says, can be great, but what is said in the meetings decides it more so doing it on feels like a 50-50. Well, 100% risk management, like my guy Wesley said. And are you talking? Did you mean ER? Got me saying and shit. I said Is that an actual word? Earnings, right? Thank you. I'm like, what are you talking about? But yeah, earnings. Earnings can be great. But what is said in the meetings decides it more so on earnings. Feel like a 50-50. Yeah, but I don't trade earnings that way, GX. I explained to them the entire night how you are supposed to treat earnings season. All right? Look at Coinbase. Coin is showing a bunch of puts with a big turnover. That tells me people are actively paying for downside protection or downside exposure in Coinbase. That makes sense because coin is very sensitive to crypto right about now. In a risk-off market, coin can swing violently. Again, that don't mean short it right away. It just means that this is a high volatility ticker where risk management is going to matter the most. I got to be blunt too because I know some of y'all need it. Just because a contract is active don't fucking mean it's a good trade. Do you hear me? You hear me? I'm talking to you. Crowded trades can be the worst trades. Crowded trades can be the worst trades. Why, Coach Price? Because when everybody is in the same position, the market can reverse and wipe them out very fast, very quickly. So this edge is going to come from you having a plan, not from copying a list. I don't want you to just copy a list. When you see top options, you don't say, let me buy what they bought. You just say, let me figure out why this is active, what level the market care about, and whether the chart actually agrees with this or not. Does the chart actually agree with this shit? Nope, that's Lyft. That's Robinhood. That's the VIX. Thought I had Coinbase. Yeah, this is coin. Especially if the strikes close to the current price. Plays already outran you, way past you. And they be buying late or selling late and all type of extra shit. Again, I want you to understand what you was looking at, right? So we're gonna take Coinbase from this situation, okay? So we already know, I want you to understand that this chart matters, even if you never traded Coinbase before, right? Coinbase is basically a risk mood stock. When people feel brave and crypto is moving, Coinbase will move hard. The people that got in Coinbase one day, right? Last year, people got in Coinbase when it was at 141. It eventually shot up to $340. It fell back down to 141. It eventually went up to 444. We back at 141 somehow. We can go lower than this. But I do feel as though we will reclaim those highs, those previous levels. What do y'all think? What do y'all think? Either way it go, coin is not a calm stock. This is a fast stock. Fast stocks can make you money fast, but guess what else they can do? Guess what else they can do? Wesley says it will drop 50% every year, minimum, high beta. They can take your money fast. Just as fast as you can make money. If you don't respect it. If you don't respect it. So now I'm going to guide your eyes using my words because I'm on my phone, so you got to pay attention. This is a weekly chart, which means each candle that you see is one whole week in price action. So if you knew, all a candle really means is this. It shows you the battle between buyers and sellers over a period of time. Green means the price finished the week higher than it started. Red means that it finished lower. That's it. Okay? Don't overthink it. Now look at the right side of the chart where the most recent candles are. You see a clear, hard drop. I'm not trying to scare you. We're not creating FOMO, which is fear of missing out. I'm just going to keep you honest. You got to be real with yourself. Don't be delulu. This is what a downtrend looks like when sellers are in control. A downtrend is simply lower highs and lower lows. So that's a fancy way of saying every time this shit bounce, it keeps falling and every drop keeps going farther down. Okay? Now I want you to notice the three major lines on this chart because those are, it's like I use it like my GPS. It's my map. So you got a purple line at the top around 444. MSTR is influenced by Bitcoin. Yep, for sure. So you got a thick red line in the middle at 289. And I got the purple line near the bottom at 141. So I didn't put them there randomly. Those are my key levels. And a key level is simply a price zone where the stock has reacted strongly in the past. Reacted strongly means the price either bounced hard from it or it got rejected hard from it. Okay? So key levels matter because as a trader, I want to remember that. I want to remember these levels. Coach Price, Coach Price taught me to remember key levels. You looking at this chart, you like, damn, this shit bounced off 141 3 times in a row. I might need to mark that level. You see what I'm saying? Damn, when the price get around 270, the buyers and the sellers go into a tug of war battle. I might need to mark that level because when it gets back up there, they might do it again. 240 was a strong level where they fought at. That mean when this shit bounced back up, 240 looking good to take profit. It's my take profit level. This is how you determine where you entering and taking profit at too. So again, they not random levels. So the 444 at the top, that is a major ceiling. That is a resistance. It's a major ceiling. A ceiling is a resistance level. Resistance is an area where the price struggled to push higher because the sellers were strong, right? That level is basically telling you at some point, Coinbase was up there. And that's where a lot of people was willing to sell or take profit when it got up there. Now look at the middle red line around 289. That's important. This is what I call the line in the sand. Yeah, Wesley, I got a whole list. Try IBIT, right? MSTR, RIOT, and Coinbase too. This is a lot of upside potential here. And that's we predicted Bitcoin to come down into the 50,000s and go all the way up towards 200. What do you use for risk to reward on this chart? Well, Jim Ed, you use that yourself. You use your brain for that. If I'm going to get in this trade, I'm going to do a 1 to 3 risk to reward ratio. For every $100 I'm risking, I'm looking to make $300 on the good side. For every dollar I risk, I'm looking to make 3. So yeah. So this major pivot level, pivot level in the middle, okay, 289. A pivot level is like a level that used to act like support, meaning a floor. Then it broke. And after it broke, it started acting like resistance, meaning a ceiling. So the beginners need to understand this one concept. A floor can turn into a ceiling when it breaks. That's how trends change, right? You inside a house. Let's say you got Superman powers. You inside the house. You jump from the floor to the ceiling, but instead of hitting the ceiling and breaking back down to the floor, you break through the ceiling, and now you're standing on the roof. So the ceiling has become the floor. Damn, this weekly chart is wild. Yeah, Wesley? It is once you take a step back and really look at it. I think so too. That's why I like looking at, when in doubt, zoom out. I say it all the time. So if coin was above 289 and it fell below it, 289 became a big problem. Because when we go back up, it's going to be a big problem again. Because traders who bought above 289 and got trapped, they will usually sell when the price returns to that level just to get their money back. You understand? Somebody says, is that on all your trades? Risk to reward 3-to-1? Yep. I'm using that. Yeah, I'm using that 1-to-3 risk to reward ratio. You think meta just changed a trend or no? For the short term, it always is. It's always changed. You know, some type of reversal happening or it's going sideways. I teach people that the market is in 1 or 4 phases, because there's 2 types of consolidation. You got distribution and you got accumulation. Then you got an uptrend and then you got a downtrend. But the market is doing 1 of 3 things. They all start with a C: consolidation, correction, or continuation. So take that for meta, you know what I mean? But yeah, that selling, that, you know, like I said, if there's people that got in Coinbase when it was above 289 and they got trapped, so they gonna wait for it to get back there so that they can sell it again. That type of selling creates resistance. So that's not my theory. That is human psychology. Right, so look at the bottom purple line around 141. That's a major floor. That is support. Support is where the buyers previously stepped in and said, okay, this is cheap enough, and it slowed down or it stopped the fall, right? So now look at Coinbase right now. Look where it is right now. At the purple support line. That means we are at a decision point with Coinbase. And I need you to understand what a decision point is. This is where the market has to choose either support holds and we bounce this off this level, or support breaks and we drop into a new lower zone. I also named the pattern in a way that you can actually remember. Okay, so this pattern is called breakdown into support. A breakdown is where the price falls below an important level, ladies and gentlemen, and it keeps falling. I keep on falling. Yeah. Looking at her. All right, so the price keep falling. I was finna sing Alicia Keys in this motherfucker. It's time to lay down. We lose this level on that, it's bad. For sure, Wesley. For Showski. This is a decision point. The breakdown level on this chart is that 289 line. Once coin broke under that, it was basically telling us that the sellers had control. Now the price has fallen all the way down into a major support. When a stock falls into major support like this, you're going to see 1 or 2 things. Yeah, this Coinbase, JB, this is it right here. So the first thing, JB, that could happen from here is a bounce. Bounce when she walk, bounce when it's a bounce. The bounce is sometimes called a relief rally. The relief rally just means the selling slows down and the buyers step in for a temporary push upward. Scenario 2 is a break. We can get a break. A break is when you don't get a break, but a break below. Literally, the price does not bounce. It slices through the roof and it keeps falling because buyers are not strong enough to hold that level. Sorry, the floor. So the rookie mistake that people make when the price is at support, they see a stock at support and they say, it can't go no lower than this. This is the floor. This is the floor. It can't go no lower. I know that for sure that it can't go no lower. I'm just playing. I used to read a lot of Dr. Seuss. But yeah, that sentence is how people blow their accounts. Somebody says, like how you break out into songs. JKB, I can't help it. It's a DJ in my brain that just won't stop. It's a party going on up there nonstop. Crypto is in bad shape right now. There's no liquidity. Probably won't be back for months. It's an interesting take, Wesley. But it will be back nonetheless. I said that and lost 20 bands, said J-Rock. How so, J-Rock? What you talking about, Willis? You said what and lost 20 bands? Oh, that it can't go no lower? Yeah. So rookies see that shit and that's what they think, right? But a stock can always go lower. Yeah. So support is not a force field, ladies and gentlemen. Hercules. Cool Whip, chill out. So support is not a force field. Support is a zone where we pretty much watch the price behavior. We don't assume, we just gonna observe. We watching. We want to wait for confirmation. If support is holding, right, the price staying above the flow, it's actually being a floor. You're gonna start to see the red candles stop getting worse, right? You will start to see the selling slow down. The momentum will slow down, right? Like when you take a ball and you roll it down a hill and midway down that hill, it started to pick up speed. And then when you take a ball at the bottom of the hill and roll it up the top of the hill, at some point it loses momentum and it'll just completely stop before coming back down. Depending on how low that floor is, it will tell you how fast it's finna go and how far it'll continue sideways too. Stop. I know it's weird, but it really does behave like a fucking ball. It's not as smooth though. Support and resistance is just fair value gap at the tops and bottoms above and below price on lower time frames. That's right. Slow down. Candlestick getting smaller. Yes, you see how some of them are very long candlesticks and some of them are very short. You see what I'm saying? DJ said, looks like lower high, looking for a lower low versus range. That's right, but we got to break below this strong level of support. You feel me? We got to break below this level of support. So you're going to start seeing green candles that don't immediately get erased the next week. What do I mean by erased? That's when you see a green candle and then a red candle come after that. It's even bigger than that green candle. And even though it went up, it just went down further than it went before it even started going up, right? It got 8. It's a bearish engulfing candle or a bullish engulfing candle. What if it goes lower? If it goes lower, then there's previous levels of support that I pay attention to. Cool Whip. I go back and I see how low was it before it got to 141. How low was it? What was the previous level before that? Right. Wait for the bounce from that level, then a retracement back into the level. That's right. You want to see these are good levels of confirmation. I done heard 2 to 3 people give explanations of what to do if that happens. JB said 134 is the level before that. Yeah, so you'll see stabilization happen. That means the fall will start to slow down if support is holding. So then if the buyers are truly stepping in from this point, okay, we will see the stock climb away from this support line. It ain't just going to tap it and hover it. It's going to lift and hold higher prices. The key word here is hold. Hold. I ain't talking about break above. It needs to break above and hold or break below and hold. Holding means it's going to stay there for more than just a moment. So again, the first thing we want is stabilization. The second thing we want is a lift. The third thing we want is a reclaim of a very important level. So reclaim is a big word, but it's simple, y'all. Reclaim just means that the price gets back above a level that used to matter and stay above it. For Coinbase, for now, the big reclaim level is that red line, the 289. But that's far away from where we are now. You shouldn't be thinking 289 tomorrow. This is Coinbase. Good morning, Price Hounds. Yeah, don't be thinking that shit gonna happen tomorrow. That's unrealistic, and that will create bad decisions. Sure will. You'll get in today, sell it tomorrow because you thought it was finna go up there. Then it'll go up there, and you'll wish you had got in. Alright, that happens. But to be honest, on a weekly chart, reversals take time. If you're a beginner, a weekly chart is not for quick day trades. Know the difference. A weekly chart is for swing trades. I'm looking at this from a swing perspective. Weeks to months, okay? Unless you drop down to a smaller time frame, this is not what that's for. So this weekly chart is how you avoid getting emotionally tricked. It tells you whether you are fighting the main trend or not. That's right, it's called swing trading. Now, remember that top options turnover screen I was showing y'all earlier? Well, remember y'all saw a bunch of coin puts and it was showing a lot of heavy activity? So the puts are getting expensive because the price has been dropping. The more the price goes down, the more those motherfuckers is going to be more expensive. The calls are actually cheap right now. The calls are cheaper the more it goes down. What city you in, my guy? If you in my city, I'd hang with you, like your style. You're in Cleveland, Ohio. I'm right next door. We can go. I go fishing in Cleveland during the spring. Fishing season is coming up. So when you catch me out there, I might be out there fishing. Y'all got some good fishing spots in Cleveland. Why are you using Webull though? Thanks for sharing all your knowledge. Because Webull is a great hub for knowledge. They got a learning center on there. If you like my information, right, there's a plethora of free information on Webull. They are second to none when it comes to courses, exams, information. Somebody says, I got a fish cabin on the lake by Port Clinton, Sandusky. Okay, well, hey, man, JKB, if you serious, pal, you inbox me, man. We'll have to get the boat out there. Is it free, Unc? What free? Might be a good leap options position on coin soon. No, not might, Wesley. Not might. I hope y'all are listening because this is not for shits and giggles, right? This is a very lucrative live stream. If you've paid attention, you could take this information, these skills that you've acquired during this live stream and use them to help you. You can either make a lot of money or save a lot of money with this information that we didn't share tonight. JB says, I've already been looking at leaps on coin. Yeah, JB, because you smart. JB, I could shed a tear right now because of how far you've came from when I first met you. Quick story, JB thought that I was too advanced to teach her. She said, you too far. I'm too much of a beginner. You can't teach me. I don't know enough. JB been locked in and know more than half of y'all ass know right now. Only been trading about a year. Trading options, that is. I don't know how long JB been investing because she had XRP when it was a penny. JB bought XRP when it was a penny, y'all. She a billionaire. It could keep going lower, though. Why not wait till you have a few green candles and back to bullish? Because, Wesley, we dollar cost average. So I actually like the company. I started out holding crypto, there. I like Coinbase. I think that I really do think it'll be $500 the next leg up. But I dollar cost averaged down. I'm a dollar cost average up too. Coin is also in the S&P, and I don't think it's going nowhere either, JB. I don't think it's going nowhere. Whenever the volatility is high, though, you don't want to trade big. You need to trade smaller, or you need to wait, because high volatility is going to make beginners do the worst thing. They're going to get emotional, oversized, then they're going to try to make it back fast. You know what I'm saying? That's not trading. You using gambling as a therapy session. That's what you're doing. Now, again, I want y'all to pick the one that match your skill level. I'm gonna walk you through 3 approaches. If you knew, you don't choose the aggressive one because your ego wants some action. You want action, right? So you want to choose the safe one because you want to still have an account next month. All right. So if you're a beginner, this is the plan that I respect the most. You want to wait for Coinbase to prove support is holding. That means you're going to wait for at least a couple of weeks where the price stops falling and starts building higher. Like, who was that just said that? Wesley. Wesley mentioned that. I agree with you, Wesley. So that means you want to wait for at least a couple of weeks where the price stops falling and start building higher. Then you want to wait for a clear break upwards away from support. Ideally, you wait for a pullback that holds higher than the support line. Again, this is for educational purposes only. This is not for financial advice. That pullback that holds is what confirms that the buyers are stepping in from there. Yeah, coin is not going anywhere. It's going to be around, right? Maybe 50 on the VIX. We finna talk about the VIX before I leave too in a second. So again, I don't want you to I want to keep you from catching a falling knife. So a falling knife, for those that don't know, that's when you buy while the stock is still dropping fast and you think you got a deal, but it keep dropping and you panic. Now, approach number 2. This is for my intermediate traders, I'm gonna say my high schoolers. You're not in high school, but as far as trading, you've been trading for a minute, right? You on a high school level type shit, right? If this was grade school. So you treat 141. You treat this as a decision zone. If the price holds and it start bouncing, you take a small position. Small means that if you wrong, it ain't gonna hurt you. It ain't gonna bother you. You place your I'm wrong level below support. And I'm wrong means that if the price breaks and stay below this level, I'm getting out. I'm not finna argue. I'm not gonna pray. No, I'm not gonna average down just because I feel attached. Good morning, options chick. Thank you for joining. I appreciate you for the heartbeat. Thank you. And then the third option that you got is the aggressive plan. I could trade the bounce. This is for experienced traders only though. Like even then, you gotta respect the risk. So you're not buying because you believe in Coinbase. You buying because you trading off a bounce off support. Yeah, and that's usually a quick trade. It's a bounce trade. You're gonna take profit into the first resistance zone, right? Somebody says hedge it. Somebody else says stomach the red. That's right. But yeah, I'm gonna take profit into the first resistance zone as the price rises. You do not need to sit there and dream about 289, right? While the trend is still down. Dreaming is expensive. We're not gonna do that. Now I'm gonna tell y'all something else that's gonna save y'all a lot of fucking money. A stock being down does not automatically mean that it is on sale or that it's a bargain. A bargain, my bad. I said bargain. Margin mixed with bargain. So that don't mean that it's a bargain, right? Down a lot just means that it's losing value. That's it. It's been losing value. Cheap is not a strategy, ladies and gentlemen. A strategy is, where am I entering this trade at? Where am I taking profit? Where am I exiting if I'm wrong? If you can't answer those 3 things before you enter the trade, then you are not trading. You are hoping. Okay? So the whole Coinbase lesson that I've been telling y'all, this is it in plain English. Coinbase is a high volatility stock that's tied to crypto. It's tied to risk move and it's tied to crypto sentiment, right? So on the weekly chart, it broke down under a major level. That level was $289. And it has fallen all the way into a major support level around $141. Okay? That means we are at a decision point. If the support holds, if the price stay on that $141 floor, you may get a bounce and eventually a reversal. But reversals require proof and time. Wesley says you use 50-week moving averages for investing. I use the 9, and if I'm swing trading, I use that 50, the 9 to 50, and the 200 EMAs. Sometimes the 25, the 9, the 2 and 25, actually the 9, the 20, and the 200. But I always keep that 200 on there if I'm using the EMAs. But you just want to keep that in mind because, you can get a reversal, and if the support breaks, it can fall into a new lower zone, and it punish anyone who bought just because it looked cheap. You get me? Jenny King invites you to co-host. I don't know who you are, baby girl. I can't do it. I'm sorry. You're going to screw the whole show up. I don't know you. All right, so the only correct move for a rookie is for you to have patience, and you need to be very strict about how much you're risking, okay? You need to let the price prove itself. Let the market show you that the buyers are real. And if you do trade it, trade small enough that you can stay calm and you ain't holding your breath and shit during the trade. All right? I supposed to told y'all about the VIX. How many of y'all never traded the VIX before and don't have a clue what this is or why it matters, how it's useful? The VIX, VIX. If you would like me to tell you, hit the follow button real quick. Some of y'all I've never seen some of y'all before. Hit the follow button so you don't miss another live stream. Somebody says it's the greatest indicator ever. What up, Adrian? How you doing? Thank you for joining. Thank you for the follow. All right, so I'll explain the VIX since I got a few more followers. That's all I need to see. It's for people that want to learn, right? That's y'all who I do it for. All right, so if you learn the VIX the right way, this could save you money. If you don't learn it, it could cost you money, right? And I want you to actually stop losing money. So not because this VIX is going to help you, not because it's magically going to help you predict the market, but because it tells you the environment that you're trading in, okay? Most people lose because they trade the same way in every environment. Adrian, don't do that. Don't trade the same way in every environment. Start using the VIX. I want you to don't buy calls like it's always a calm bull market. Don't buy puts like it's always a crash, okay? This VIX is going to help you stop doing that. Somebody says it really is the best indicator in my opinion, and people don't know about it. That's right. That's why I'm here to help them a little bit if they can catch on. Or if I can help them catch on. This is basically a risk weather report, okay? The VIX is a risk weather report. If you ignore the weather report, you're going to be one outside getting pneumonia up the ass because you standing outside in a storm wearing sandals acting surprised. Sometimes the news be wrong. I get that. Sometimes the news don't matter. I get that. But sometimes you could have just watched the news before you brought your ass outside in that and you would have known. You feel me? So tonight or this morning before I get off, I'm going to explain what the VIX is and what it is not, what it measures and how it affects options pricing, and how it affects your trading behavior and why people get trapped whenever the VIX spike up or down. Okay? You need to know how to use this to make smarter decisions whenever you trade in stock options and futures. So I'm going to say, make sure I get it to where y'all get it. So the VIX is an acronym for an abbreviation for a volatility index. Volatility index. VIX is short for volatility index. People call it the fear gauge. This is a fear meter. So here's the truth. It's not exactly fear, right? It's not exactly fear. It's the market's price of expected movement. But yes, AKA as known as fear. Angel, Webull, Webull. All right, so again, this is the market's price of expected movement. So I'm going to say this slower because I know some people still confused. The VIX measures how much movement traders expect in the S&P 500 over the next 30 days based on option prices. That's how they come up with it. Again, the VIX measures how much movement traders expect in the S&P 500 over the next 30 days based on option prices. It's not reading your emotions. It don't give a fuck about how you feel. It's reading what people are paying for protection and for exposure to swings. So it is an active indicator. It's not considered to be a lagging indicator. So active, you damn near have to watch this at the same time of watching SPY. Y'all ever seen them professional traders using 3-4 screens at one time? It's a reason why they're using all them damn monitors, because there's so much information that needs to take that you got to pay attention to. But guess what? People not. So many different variables that you should be including in that equation. All right. All right. So I want you to remember this sentence. The VIX is not based on stock prices directly. It's based on option prices. Okay? Options are insurance contracts and speculation contracts. What do I mean by that? People use options for insurance. If they own 1,000 shares of Apple, they bought puts because they want to protect their shares in case they share. If the Apple go down, they want to not lose a lot of money. Or speculation contracts. They think Apple about to go crazy when the iPhone 18 come out. So they got contracts because they speculate in the price. So when the VIX goes up, it means options got more expensive because the market expects bigger moves. You got it, Adrian? I'm glad you got it. You get it? Got it? Good. It's good. So volatility is a fancy word for how wild the price is moving. Low volatility means the price moves smoothly and calmly. High volatility means the price moves aggressively. If y'all just coming in, you catching the end of the show, you can catch the replay on my YouTube channel. I will be reposting this entire live stream replay on my YouTube channel. Tonight we went over the companies that are coming out for earnings next week that I'm paying attention to. Walmart, Deere, and what was the other one? Alibaba. And then we talked about earnings season. We talked about so much. Went over so much. Somebody said this is good because I've never used it for options. Yeah. Oh, it helps so much. It helps so much. So when the VIX go up, yeah, the options are going to get more expensive because the market expect bigger moves. So a part that people don't understand, right? So volatility does not mean only down. Volatility means bigger moves in both directions. You don't know. It can go up a lot or it can go down a lot. Okay? In a high volatility market, you can get a massive red day and then a massive green day right after that. That's why people get chopped up, right? Because they get bearish at the bottom and then they get bullish at the top, right? They reacting emotionally. They're not really reading the room. They're not reading the environment. What's your YouTube? Options Chick. It is Ironworth Trading. You can just click the link in my bio. It'll take you straight there. Wellner says, just waking up to go to work. Wellner, not for long. You're going to retire soon, real soon. And if you want to, because I know some of us are building lives and careers that we don't want to retire from, right? Ain't nothing wrong with that if you love your life, your job so much you don't want to retire. But for those that do want to retire, you in the right place because I teach you to invest, okay? You teach you to invest in yourself first, Wellner. Invest in yourself first, then you invest in the stock market, then you trade stock options, only after you have built a solid financial foundation. But Wellner, we got to get you off that hamster wheel. And today, enjoy your day at work, man. You're going to work super smart, not hard. We're going to make today twice as good as yesterday and half as good as tomorrow, right? Don't let them piss you off either. Think big in there. Think big in there. It's gonna get you off the clock. So again, volatility does not mean only down. Okay? So the VIX is not a crystal ball. Eli says, how do you invest in yourself? Good question. You invest in yourself by making yourself more valuable, by investing in learning, right? You are your biggest asset. An asset is anything that puts money in your pocket. A liability is anything that takes money from you. Are you your own liability? Are you your biggest liability, or are you your biggest asset? Ask yourself that question. And if you are your biggest liability, meaning you take money out of your pocket more than you put money in your pocket, you taking from yourself more than you give to yourself, you need to change that. Invest into yourself. Wellner says, going to a trading class on Saturday. I hope they do you well, Wellner. Real talk, because that's investing in yourself. Yeah, no problem, Eli. Reading a book could be investing in yourself. Working out could be investing in yourself. Brushing your teeth is investing in yourself. Like, there are so many. Hygiene is investing in yourself for sure. Health is wealth. But you drive past houses every day, empty parking lots that you could rent out. Like, you need to learn about cash flow, y'all. Everybody want to trade, but you got to have buying power. You need to have money coming in. You need to have 3 months of income put up so that you don't like have to sell a good position to pay for some shit that because life be started lifing. So now you got to close your fucking great ass position. You shouldn't have to do that. So put some money to the side for when emergencies happen, right? I'm telling my people that because I know some of us have traded with rent money, gas money, bill money, mortgage money. Like, come on now, that's the kids' lunch, fool. What Dashiki say? It's the kids' lunch. That's the kids' food. But anyways, the VIX is not a crystal ball. It does not tell you the market will crash tomorrow. It does not tell you buy calls now. It tells you what the market is pricing in as risk. That's it. So it also does not measure the NASDAQ. It is tied to the S&P 500, which is SPX or SPY, but SPX mainly. So don't treat it like it's direct reading of technology, like it's a direct reading of technology, because it's not. Technology can be more volatile than the S&P, but the VIX is still the main market risk temperature that everybody watches. Now, I'm not going to drown you in formulas. We're not going to nerd the fuck out at 6 a.m. in the morning. I'm not going to do that. That's for another day. But you do need the idea. I do need to tell you how VIX is calculated without the math part, okay? The VIX is calculated from a range of SPX option prices across multiple strike prices, focusing on about 30 days out. It look at how expensive those options are. So if traders are paying up for options, the VIX is going to rise. If the option prices get cheaper, the VIX is going to fall. So think of it like this. If a hurricane is coming, right? Think about if a hurricane is coming, insurance get expensive, don't it? But if the weather is calm, insurance is cheap. The VIX is basically the insurance price index for the S&P 500. That makes sense? So when the market is calm and it's drifting up, people feel safe. They buy less protection. The options get cheaper and the VIX is going to fall. So yes, when the VIX move opposite of the market, don't turn that into a dumbass rule like VIX up means the market down, because a lot of people think that. It ain't dumb. I'm sorry for saying that, because I used to think that too. But it's true. I was thinking some dumb shit. People think that if the VIX go up, SPY gonna go down. But they do run opposite to each other, but it don't necessarily work like that. It don't necessarily work like that. VIX levels tell you what kind of environment you trading in. And your strategy must match the environment. You want to look at this and look at SPY at the same time. When the VIX is high, the market can swing violently. The option premiums are expensive. That means that buying options is going to become harder because you paying more and you can lose more. If you get the direction right, you still could lose because the premium was inflated. You got to understand this shit when you trade in stock options and you be wondering what's going on. Or maybe you don't wonder what's going on. You don't care. I get them type of traders. But them type of traders will be better off inside a casino in front of a slot machine. Wesley says the money flow will tell you what state the market is in. Right. That's true as well. So again, I don't want y'all getting smoked out there, man. I don't want you to buy options when the VIX is high, right? Thinking that the options are, meaning that the options are expensive. So then even if the stock move your direction, the option don't pay you what you expected because volatility gonna come down. And what do we call that? A volatility crush. That's when the option prices drop because implied volatility drops, even if the price moves. What's a good VIX? 15 to 20. That's a comfortable level. Cedrina. VIX is volatility index. It is basically going to tell you whether there's a lot of fear in the market or not. It looked like a stock because you can look it up like it's a stock, but it's really used as an indicator to tell you whether the market is full of fear or not. So whenever we got a high VIX, then there's going to be usually a lot of selling going on, right? And whenever there's a low VIX, there's a lot of buying. So whenever whenever the VIX was low, then we are near all-time highs most of the time because everybody's comfortable and they're buying. And Cedrina, you can ask any question you want. It sound like your dad's name was Cedric or your granddaddy's name was Cedric or something like that. I was going to name my daughter, I have a daughter. I was going to name her Cedrica, but everybody told me don't do that. So I didn't do it. They was making fun of my name. They like, don't you dare name that girl that. But Cedrina is a beautiful name. And I'm only saying that because my name is Cedric. I'm biased as hell. Anyways, the volatility crush. Y'all don't want to get volatility crushed. Implied volatility is another term you have to know. Okay, implied volatility means how much movement the option market expects. When implied volatility is high, the options are expensive. When implied volatility falls, the options get cheaper. Remember that. Because you buying options. If you an options trader, you spending your money. So why the hell wouldn't you want to know this information? I don't want you to buy a call and then a big event is happening. You don't know shit about the big event. You're not worried about the big event. You just trying to buy a call, but you don't know its earnings, that company got earnings. The stock go up a little, but implied volatility could collapse after the event and it will cause your call to still lose value. You can lose money even though you was right about the direction if you don't pay attention to implied volatility. You're going to be sitting there confused. Like I was right, but why did I still lose? You lost because you paid too much premium for that contract. This is why the VIX matters. The VIX is going to help you understand whether the options are generally expensive or cheap in the overall market. Y'all get it? So whenever the VIX spike, the market is in panic mode. Panic mode is going to create extreme candles. The first move during panic mode is exaggerated as hell. So the market can drop hard, the VIX spikes, then you get a violent bounce, the VIX drop. Literally. And just check it out tomorrow or today. Just look at the VIX today whenever the market open. Yeah, don't make the same mistake that rookies make. They see the VIX spike up or down and they immediately buy puts at the bottom because they feel fear, or they see a bounce. They see the VIX go up and they buy calls too late. They buy calls too late because they feel relief. They trade emotional and they don't have no structure behind it. So here's a rule that I want y'all to keep in mind, right? So whenever the VIX is spiking, you trade smaller and you wait for confirmation. Confirmation is the market showing you that it actually wants to continue that move. It's not going to fake you out, because you can get faked out without paying attention to confirmation. When the VIX is high, you must reduce your position size, right? Like the ladies in the chat with my sisters, them be saying period, not period, exclamation mark. And user 11269471811426. Options are supposed to be confusing. They are not. It is not. It's so many variables that take place in the trading options that it is confusing. But it's okay. Confusing just means you in the learning stage. That's fine. That's fine. Continue to learn. It's gonna all make sense. So when the VIX is high, you reduce your position size. That means I'm not finna put a lot of fucking money on this, excuse my French, if this is high. No, you're not trying, you doing it. Did you try to comment? Did you try to type in I'm trying, or did you type in I'm trying? You actually did it. Are you trying to listen to me right now, or are you actually listening to me right now? See how it's a big difference between trying and doing? You doing it, man. You actually doing it because you here. You showing up for yourself. Even outside this live stream, when you do research, you showing up for yourself, which makes me want to remind y'all, YouTube is free. There's a lot of free resources. No one should pay anyone to teach them anything until after they have exhausted all of the free information that is out there. That means go out there and learn some of this shit for free before you try to hire somebody and pay somebody else. If I only cared about making your money, I would not fucking tell you that. It's the people that hire me, right? Pay me. And then I say, hey, well, look this up on ChatGPT for me. And then they say, well, why I'm gonna do that? If I got ChatGPT, what I need you for? Or I say, go watch this YouTube video for homework. And she say, well, if I go watch that video, what I need you for? What the fuck? Go watch the video. Go watch the video. Go look this shit up on ChatGPT, please. Please stop treating that phone in your hand or that tablet or that computer like it ain't a never-ending story. Like, it's just nonstop. I know you don't like to read. I know some of y'all like picture books, with your picture book reading ass, but do some due diligence. I'm telling you, it'll help you. Do some research. It will help you. It makes money. You either do the research and learn this skill set, this wealth building, generational wealth building skill set, or take your ass to a 9-to-5 and work 12-hour shifts and do that. If you want to mop a floor, then mop a floor. Be my guest. I'm not mad at people. The floors need mopped, okay? I'm not mad at them at all. I'm not knocking them either. But, if you would rather, me personally, I'm with the union. I'm not shoveling wet concrete, so I haven't been to work in about 8 months. I would rather use my brain and do exactly what I'm doing, which is invest, trade stock options, and I help families get stuff like a trust. I help them get things like trust accounts. I help them direct them towards opening up a Roth account. Hell, I even got my license to sell life insurance. Anything but shovel wet concrete. Anything but work 12-hour shifts anymore. I'd rather hear 100 people tell me no in sales before I ever work a 9-to-5 again. But that's just me. Okay? Everybody not the same. Put it in a book and people will never open it up. That's right, user. I want you to go look up the word thesaurus. Look up the origin of the word thesaurus. Don't just look up the definition, okay? Don't just look at what Oxford told you. I want you to look at the origin, like the fact that it's Latin, and what did it mean in Latin and Greek, so you can see how they play them in your face as far as words, and how if you really want to hide something from somebody, you put it in words. Eric says, I like what you're saying. This space isn't for you. That's right, Eric. Good morning, money. Y'all see how I had angels in the chat. I got money in the chat. Y'all names is giving abundance, and I love it. I love the names in here tonight. So whenever the VIX is high, y'all, those 0 days to expire, how many of y'all day trade? And when you trade, your expiration date be Same day. You trade same day expiration contracts. If you trade 0 DTE contracts and you don't use the VIX, you missing out. You missing out. You trading with your hand. You trading with one hand behind your back. Because the VIX is basically gasoline near a match. When the VIX is high, 0 DTE premiums can be expensive, and the market can whip. That means you can be right and still get chopped because the movement is just too violent. And the timing has to be perfect. So in a high VIX environment, you either step back from the 0 days to expire, you either step back from the 0 DTE, or you treat it like a scalp only, right? With strict stop losses in a very small size when you trading. Why are you trading a lot and you see the price doing what it's doing? Why are you buying 60 contracts and you see what the price is doing? Some of y'all say, good Lord, bro, I only buy one contract. Okay, well, one contract is a little too little, okay? I advise people to listen to the educational advice that I'm giving you. When you buy more than one contract, you can take profit more than one time. That's all I'm going to say. Okay? So, no swinging 0 days to expire like it's a long-term investment. That's crazy. We're not doing that. And for the future traders, the VIX is going to tell you whether the day is likely to be smooth or violent. Some of y'all trade futures. Thesaurus is a treasure. That's right, user. You went and looked it up. I'm proud of you, right? Because you said you want to hide something from somebody. You put it in a book. And what is a thesaurus? It is a book full of words, like synonyms and stuff in it, right? And the origin of the word thesaurus is treasure, house of words. So they hid my treasure. They hid our treasure. They hid the king's treasure in a book full of words. That's how they get you from. This is why we will perish for a lack of knowledge. So I study etymology, the origin of words, and how it has changed through the course of time. And that's one that I found that was super interesting. Thesaurus. It really means treasure. It's gold. Used it in my career for over 30 years. I got a little off track. What did you use, Brian? What are you referring to? I got a little off track. Because I read your comment probably 2 minutes after I was talking about it. Oh, the thesaurus, yes. So you are talking about what I'm talking about now. It's gold. A thesaurus is gold. He used it in his career for over 30 years. What are you teaching? Some of everything, Big Skin, Colombo. I done pretty much talked about quite a bit. But for the most part, financial literacy, not just day trading or swing trading, stock options or futures or crypto. We talk about financial literacy here, how to gain assets, protect them, keep them, and pass them down. But for now, I'm teaching about the VIX. We're talking about the volatility index. Retired military Air Force. Thank you for your service, Brian. We appreciate it so much. Thank you. Round of applause. So again, people think the VIX is high. I should buy VIX. The VIX is an index. This is not a normal stock. You can't just buy VIX like you buy Apple. People trade VIX through products like VIX futures or VIX-related ETFs, and those have their own rules and risk, including something called contango and decay. Decay means a product can lose value over time, even if you feel like volatility is high. So if you don't understand VIX products, don't touch them. Use the VIX as an indicator first. Learn it. Then if you want, we can do a separate class specifically on VIX products and why they behave weird. Steve Duran says this channel is gold. Always diverse, always top quality analysis. I salute you, sir. Thank you, Steve. I appreciate it. I do my best. I do my best. And you want to know what's funny, Steve? I look up to people like Jim Cramer. I know that's funny. I want to show like Jim Cramer one day, man. Y'all will watch my show. I want to show like Jim Cramer. I'm going to buy a building. I'm going to get the desk, the setup. I'm going to have me a nice little soundboard and shit like that. The big green screen in the back. Feel me? Podcast maybe. What's your opinion on what SPY ETF is going to do today? Tyler Crispy. I'm gonna let you know when my crystal ball turn back on. But look at the futures. I'll give you a hint though. Look at futures to try to determine before the market open. Just look at how the futures are behaving. If you want to know how SPY is going to behave, look at the look at ES on the SPYs. Or look at micro. Look at the micros too. Either one, it don't matter, but I'm just telling you. Look at the futures to determine what is your bias for the day. Because personally, let me show you. Personally, I would like SPY to come outside of this range. Now, a few days ago, we was talking about SPY when it was up near all-time highs in the 697 level. That's why I got that red rectangle box up there, because I was telling them every time it get up here, it dropped down. It has failed to break above this level for about 3 months now. Say 2 months. Yeah, so you can see what the market finna look like today pretty much just from trading them, unless we get something to change. But Russia's supposed to be using the United States dollar or some shit like that. We got threats of a government shutdown. We got to keep all that in our mind, you know. So any questions? Let's wrap this up. So I was talking about the VIX. The VIX measures expected market movement through option prices. It's basically the cost of insurance for the S&P 500. When it rises, options get more expensive and the market becomes more violent. When it falls, options get cheaper and the market is calmer. It does not predict the future, but it does tell you the environment that you're trading in. If you match your strategy to the environment, then you stop making them dumbass rookie mistakes. Now, if you want more learning, please feel free to hit the follow button or inbox me if you're interested in the mentorship. I always tell people to make sure that you build a solid financial foundation. So if you are not investing towards retirement, basically getting the fuck off the clock so you don't got to work hard no more one day, then you tripping. You tripping. Focus on retiring. And retirement don't got shit to do with age. It's a number. How much do you need to never have to work again? Okay? How much do you need to never have to work again? You should focus on building that. Invest in yourself. I suggest that you invest in yourself more than you invest in these companies that you investing in too. I do. And if you care about your loved ones, your children, maybe you got nephews and nieces, cousins, aunties, uncles, brothers, sisters, family members, whatever. I told y'all I'm a licensed life insurance advisor as well. I said advisor, life insurance agent. So I can help you get that as well. So if you need help leaving behind a legacy, I can help you with that as well. I would love to help you with that. Please inbox me if you don't have that figured out. And if you would allow me to help you, I would love it. If you already got it, let me make sure that your policy is not full of shit, okay? You don't want to wait and let your beneficiaries figure that out. If you don't have a trust, now's the time, because I'm offering to help you open that trust. Inbox me your name and your number and the best time to call you so we can get that going. And I'm also hiring those who are looking for extra income and you are serious and you got a good work ethic and you ready to put in the work. Maybe you had a fucked up experience with somebody else in sales. That I am not that person. Okay. So I wanna see you win. I want to put you on a winning team. I care about people, right? So what I do is I focus more so on, you know, helping people, right? I use money. I help people. I love people. I use money because I love people. I don't love money and I'm using people to get money. No, I use the money to help people. I learned that from a guy, and that's been helping me out ever since. Solomon says, I don't know who to help. Well, they out here, Solomon. People need the help. I can't tell you how many people I helped in the live stream tonight. Let me see. This live has had 3,000 people in here. I got 78 new followers. When I get off the live, there will be people that inbox me their name and their number because they need my help leaving behind a legacy, opening up a Roth, opening up business insurance, maybe opening up a business because they couldn't. I help a lot of people. So if you need help, if you're one of those person, you one of these people, inbox me. It's open. The inbox is open. Hit the link in my bio. Join the community. Join my Discord. It is open. I would love to see y'all again, but you don't got to go home, but you do got to get the hell out of here. If y'all haven't hit the follow button already, go ahead and hit it, please, so I can see you again. I might go live again later, but it'll definitely be after the market is closed. So if micro futures down, SPY may go down as well. There we go. You got it, Tyler. Pay attention to the futures. Yes, the high yield savings account. But I really want people to keep in mind that saving money, you better off investing than you are saving. But when it comes to a rainy day account, an emergency funded account, yes, it should be growing interest. And it ain't gonna do that in the regular savings account. It's not gonna do that in the bank. Okay, sound good. Thank you. They are down a good bit. That's right, Tyler. I'm paying attention to Bitcoin right now, says Steve. Everyone's running, so I'm watching and waiting. Oh, dollar cost average that shit. What time you plan on going live again? I will let you know how I do. I'll be back on again later, Tyler, this evening. But join the community, man. I know a lot of y'all like, bro, I don't want to download Discord. You don't have to download Discord, okay? You don't have to. I'll be right here on TikTok again later on today. I'll be back again this weekend too. I go live pretty much every day, just random as hell sometimes, okay? I will go live random, so you might want to hit the notification bell. Yeah, options chick is the link is in my bio. It's a community. Yep, straight drop. They be in there. We do that often, straight drop. They hit the link in the bio. It's in my link tree. Also hit the follow button now. Y'all gotta, don't miss another live stream. I will also have this replay on YouTube. So with that being said, I'm gonna go ahead and cut it short so that we're not watching so that they don't gotta watch a 3-hour fucking video. You feel me? And if you're watching this video from YouTube, don't forget to hit the subscribe button. And I appreciate you for checking out the replay. Thank you. All right, y'all. Y'all have a good day, man. And remember, we're gonna make today twice as good as yesterday and half as good as tomorrow.